expected for maybe the wrong reasons. A 10-year note auction that for the fourth straight auction stops through. Very good sign there. But some late day headlines come out. We see that the U.S. Embassy in Baghdad is being evacuated because of security reasons in the region. Oil prices pop by more than 4%. And as oil prices take that elevator up, we do see that stocks get hit. So, Dylan, geopolitics trade in oil might be here for you. Other than that, alongside those headlines for the U.S. Embassy in Baghdad, as well as the embassy in Bahrain, for what it's worth, seeing that military families are being asked to leave. You have gold turn around and trade higher during the course of the session. The dollar mostly lower as yields move to the downside. We're waiting on the Oracle earnings here after hours, guys. So let's just take a swing at this market. Ilya, CPI first is what hit our tapes this morning, 8:30 a.m. We can go to the charts here, Ryan. If we consider the market reaction, initially it was a little bit of a wobble, and then we trended to the upside, if only briefly, 8:30 a.m.
Yeah, it was a nice pop. Once the numbers came out, equities seemed to like it.
Equities did seem to like it. Headline CPI 2.4%. The month over month only 0.1. Core readings likewise a touch softer. Ilya, the vice president, was out immediately after, I think, saying something about monetary malpractice and the Fed needs to cut immediately. The market prices in like marginally higher cut odds for the forthcoming meetings, like 2% for July, 6% for September. Not a huge shift.
Yeah,
so
nobody's running away with this thing.
What's your take on the inflation report before we make our way through to like the news of the day that came right in the second half of Futures Power Hour, which we talked about on air, this alert from the DoD, and we can get into why this is probably worth fading in a few moments.
Well, the internals of this report were encouragingly normal again. So in April, everybody was concerned, like, oh my God, Liberation Day, all these tariffs, holy moly, this is going to be goods inflation. And in the April report, that goods inflation came to a 0.02 percentage point contribution to the overall story, and everything stayed in services. This time, it was a 0.05 percentage point contribution from goods. So goods inflation continues to be non-existent, is the quick version. There was no tariff-induced spike. It came again from services. But we saw this movie in April too. PPI is coming tomorrow. In April, what we saw was that the reason that there was no goods inflation in the consumer version of inflation data was that it all got eaten at the wholesale level because businesses took the hit in margins. And there was about a 1.6% month-on-month decline in margins for businesses being tracked in PPI because they ate the increased costs. PPI comes out tomorrow. We'll see if, in fact, this inflation data is as encouraging as it looks. But for the most part, it is relatively sanguine. The increase in services inflation, the increase in goods inflation, very modest. The contributions from food and energy, basically the same as they were. Energy is about a quarter of a percentage point downdraft. Food adds about 0.4 percentage points. That's in line with the contributions we've seen over recent months. There's really no dramatic thing in these numbers to go, oh my God, the tariffs are doing something crazy. But whether that's the case because businesses are taking it on the chin or whether the tariffs really aren't doing something crazy, we're not going to know that until the PPI numbers come out tomorrow and tell us if April just happened again. Because if this again becomes businesses shielded consumers from prices, but consumers didn't buy anything anyway, which was the April story, retail sales basically fall apart, even though consumers are being shielded. If that's where we're going again in May, well, then the second quarter is going to start looking a lot like the first. Weak consumption. And you can't have that and avoid recession. So we'll find out. I think that the market didn't take this at face value is reasonable after what happened last time.
Well, Dylan, what would be face value? You're saying face value is less inflation, bonds up, rates down, markets stronger. Like that would be face value?
Yeah, well, face value would be, oh, good, the tariffs aren't inflationary. And that was the readout in April until the PPI numbers came out the next day. And you go, oh, the inflation just didn't get all the way down to the consumers. So we'll find out. But if the story here is the same as it was last month, then the story on consumption is negative because it's telling you, yeah, there's no inflation because businesses are eating it and consumers still won't come. So what's going to happen to all these giant inventories that everybody's accumulated? If they're not being taken up by consumers, that's going to be a cliff later because how much can you stick in inventory? Well, if inventories are full, not much more. And if you've been buying hand over fist to build those inventories, and now you're stuck with them and it's a non-performing investment, that's not good.
Okay, but today, this market decline probably has nothing to do with CPI.
It isn't that, no.
Reuters, Idris Ali, Reuters national security correspondent covering the Pentagon at 1:32 p.m. Eastern time, which is marked off here on the S&P 500 chart, tweets out, the U.S. Embassy in Iraq is preparing for an ordered departure due to heightened security risks in the region, officials say. Dylan, this is looking a lot like one of your geopolitical specials. Let's go to 1:32 p.m. Eastern time here in the oil market, 1:32 p.m. Eastern time here in the oil market. Oil really starts to take the ratchet up. There's a little bit of a move beforehand because I'm sure people knew before they told Reuters. But Dylan, this looks geopolitically induced again.
Yeah, I mean, so listen, again, I'm not going to leap out of bed here to get right on this for two reasons.
Tell me.
One, first of all, I agree with you, and I think that that an opportunity is clearly brewing to do the sort of the classic fade on World War III. But again, these things last more than a day. So yes. I think that there's room for this thing to get more hot before it gets less hot. And two, Joe Biden's not the president. And this president, in my opinion, is more unpredictable, more erratic, and more likely to go to more extreme outcomes.
As we see in Los Angeles in real time.
Exactly.
No, my sources tell me that Joe Biden was never president. It was actually an auto pen.
Okay. Well, then auto pen is much more likely to send the Marines into Los Angeles for no reason. And so, I think that those are two reasons to have a touch more caution. I still will fade this ultimately.
Yeah.
But I'm not going to rush to do so. But I do think it is an opportunity brewing to fade oil because I do think this could easily get hotter before it gets cooled off. But I sure would like to get us. I mean, it's not just Trump. Remember, the Treasury Secretary is objectively, catastrophically unqualified for the job. And so it's not like you have like a former general who's really in charge of the military. You have a blowhard TV host in charge of the military, which is comical were it not tragic. And you have a president who's also a blowhard TV host. Nothing against TV hosts as a retired TV host myself, but you don't like to the guy who's sending the Marines in for no reason into Los Angeles could easily be the guy who sends some Patriot missiles into Tehran for no reason on an open signal channel. And so that I still ultimately probably will sell this thing, but those are the two reasons that I sort of am not so. I was extremely confident last time because I was like, there's no way Iran's going to do it. There's no way Israel's going to do it. And there's no way Biden's going to do it. And so sell it. But I can't say with such conviction that there's no way that the Pete Hegseth, Donald Trump axis of military intelligence is qualified to deal with the situation or not likely to do something catastrophically idiotic.
So just as a point of note there, because the part of my brain that played Red Alert Command and Conquer just needs to make clear that Patriot missiles are interceptor missiles. We wouldn't actually fire those on Tehran.
Oh, thank God I'm not the
Okay.
Secretary of Defense.
Well, I neither am I, but I did give you a signal.
If anything, this
Tries to
suggests
send a
Patriot missiles might get fired
That's
every
my
run.
point. This guy would try to send Patriot missiles.
Yeah, I think
Fair
Dylan's
enough.
point stands.
Okay, maybe I just enhanced your point. But okay, here's how we know here's why I'm so confident this is geopolitics induced. When oil is inching up over the past few weeks, you can make the case as we're grinding higher in early June. It's just all tied to trade tensions relaxing, right? Stocks are edging higher, oil's edging up, right? Gold's no longer advancing. Instead, it's like copper and silver making the headway. All of it's kind of pro-growthy. So of course, oil would be moving up. But during this grind, vol is coming in. That's the lower panel here, IVR. We're looking at this on an hourly time frame. You can see that the general run of direction, if we were to put an arrow on here, is basically, I want an arrow on here. Where aren't you coming out here? There we go. Okay. We're going down, right? The path is lower in volatility until today. And then you have this big surge up in oil prices alongside vol expanding. And that's kind of the tell that something changed. And you look to the headlines, and then you look at the market reaction down to the exact minute when the Reuters report comes out, and you see everything across the board moving in tandem right around 1:32 p.m. Eastern time. So I think we can flag today's stock decline as, I'm personally going to say it has nothing to do with the U.S.-China trade deal, which we'll talk about that in greater detail in a moment. But it has nothing to do with that. It has nothing to do with CPI. It's really just the market getting spooked by these headlines, which worth going into for a quick second there, Dylan. Sometimes embassies are evacuated because CENTCOM, in that region, because CENTCOM, our control apparatus for the U.S. military in Central Asia, we see that they say, okay, there's a change in military posture here. We're expecting something to occur, and therefore we're issuing this order for evacuation. The reporters that follow things at the Pentagon and at CENTCOM, who I follow, that are stationed in the Middle East, say that this is not an order coming from CENTCOM. There has been no change in U.S. military posture as of about 25 minutes ago. And to that point, this was an order that came directly from either state or the Pentagon itself to allow military families to voluntarily remove themselves from the area. So it's, I mean, again, it kind of reads like it's posturing, like we're trying to signal to the Iranians, like, hey, listen, we really want to get this deal done, but we're running out of time. And, if we don't get it done, then we're going to have to take measures. Israel's going to attack. Israel's going to attack you guys. We know that you're going to retaliate against us. So we just got to start moving the chips around in case that's the way this goes down. But I don't think the Trump administration themselves, based on everything that we're seeing here today, maybe I'm misreading this, Dylan. I don't think the Trump administration is particularly gunning for a war with Iran. From, again, all the available public reporting.
I think for sure they're not.
Yeah, I mean,
Trump's, like Trump's maybe irrational, but like this has been one thing. This has been his one consistency. You got to give that to him at least, right?
Yeah, I mean, this is not a president that wants to start a war, it seems like, anywhere.
I know it's like the good cop, bad cop thing. Like, oh, if you guys don't come to a deal with us, I'm not going to be able to stop the worst things that Israel's going to do. I understand. But like, there also seems to be a clear desire from what the diplomatic conversations are that this is like a last resort. And they like to keep it that way. So I don't know. Ilya, are we going to test the highs pre-Liberation Day is the question. A 55.9 IVR. Dylan doesn't want to fade this today. Do you want to fade this today?
I don't want to fade this today. But if you were to, and I know I'm a famous skeptic of sloped lines, but if you were to draw a sloped line capturing these recent highs, it's a pretty interesting place we find ourselves in. I don't see any reason to fade a giant green bar on the chart until the price action tells you that it's gotten any kind of weak need. You're coming up on the April swing high, so the risk reward isn't great to chase this higher, certainly. Let's see if it gets a little bit wobbly here at this resistance. I think if you let's go to a 4-hour, 8-hour chart, you're starting to see a little bit of oscillator divergence on the 1 hour, but it's not anything to write home about. You're starting to maybe see a little bit on the 8-hour, maybe a little bit on the 4-hour, where you're setting higher highs on the price, but your oscillators aren't doing that. And so you have kind of weak momentum as you're setting these highs. That doesn't necessarily mean that you're not going to keep powering higher, but it can. You need more confirmation. It is the beginnings of a signal. So we'll see. I think this needs a day or two to kind of figure itself out. But my proclivity is to want to short it. Once it took out that resistance at 64, though, and I was short right underneath it, I got out of the way and basically said, oh, well, if my underlying assumption was this range top holds, now it has not held. Thank you very much. I'm going to take my tiny loss and walk away. You all have a nice day now. And here we are. We're now meaningfully higher than that, so I'm pretty happy with that decision. This loss could have been uglier. And so now I'm just waiting to see what this does. I don't think there's a buy here. There might be one if it keeps going, but I don't think there's a buy here now. And I don't think there is a sell until you see the market kind of embrace the fact that this is a nothing burger. Once you do, then yeah, attractive sell.
Dylan, I mean, I think we're, I'm not going to say fade this right now here, but it all seems to be tied to one trade. Oil probably can stay stickier in the short term than equities can. But I think the clear point is that at these levels here, this is $68 a barrel oil is not a problem for equity markets. It's more about the geopolitical impulse that are causing people to de-lever and de-risk. Gold does get a run up here on the back of some of this news today. Again, we see that reversal as the session goes on around 1:30 or so. Everything else turns the corner, and gold wasn't that far removed from it. But we really haven't made progress to climb back into the wedge to suggest this is a wrong interpretation, to keep alive the prospect of the former symmetrical triangle here. I'm, for what it's worth, staying long gold. Dylan, I know that you're not much of a gold guy, but silver here did have a more interesting pullback in today's session. I would point out that the decline stops right up against the former high that we had in October and up against that 1 week moving average. So there's a point to all this. And one of the points that I wanted to bring up today here is to validate a theory of ours that we've been talking about, I think, for some time here. There you are. Data compiled by Bloomberg today, released in an article I read, shows that gold has overtaken the euro as well as all other currencies combined as the second largest component of global central bank reserves as of the end of last year. Ilya, we've been working on this assumption that given the incentives in the world and how they've changed since the Russia-Ukraine war, there's just no desire, there's no trust in holding either the dollar or the euro in a certain sense. But you have to use the US dollar because it underpins global trade. And so if you're a Russian, you're gonna keep your assets in European banks when the sanctions are coming off lifted, or even if you're not sanctioned, are you going to trust your funds in Europe? The answer is obviously no. Gold here jumps up. Gold is now the second largest component. China's buying, a bunch of central banks are buying.
Yeah.
But is this perhaps the most instructive chart in the world between the two of you? Like, if we're thinking about the metals picture long term, the fact that there's this much demand from the biggest whales in the pool and it's coming at the expense of everything else, do you think this is going to stop anytime soon? Why should we get off the metals train? Ilya?
I don't think this is the driving influence for metals. Obviously, I think that the share has increased makes perfect sense because China, the world's second largest economy, has been buying oodles of gold for the past several years. And for them, it does make sense to diversify because for them, they've been looking at this thing where since 2022, they have to do business with Russia in not dollars. And they've been attempting to create a kind of secondary clearing house that isn't dollar-based SWIFT for that kind of a thing and trying to attract people to it. And I think one of the main issues is if you're a country like Russia, well, then the logic is beggars can't be choosers. You're going to transact in yuan because you need to transact somehow, and China is the only game in town. But if you wanted to really build liquidity on this thing and really attract other countries to go into a non-US dollar clearing world, or at least to diversify and do both, then you need to have something that's predictable and liquid for countries that aren't Russia and therefore stuck. And so in that sense, it seems like, and ING, the Dutch bank, made this case, and I think it's a very, very good case, that the idea is not to backstop the yuan with gold, but to backstop transactions on their clearing platform in gold. As if to say, look, we know that the yuan is locked on shore and not very liquid, and you can't really go very far, but if we back this up in gold, well then whatever transactions you do, the flows through this platform are gold redeemable. And gold is international, and it's liquid, and it's not locked on shore anywhere. It's fungible across markets. So go ahead, use this. This is liquid and it's safe. Your money isn't going to get locked on shore at the whim of Xi Jinping. I think that's the pitch. And it makes sense to some extent, but of course it hasn't worked. So yes, China now sits on a giant pile of gold reserves. But does that make them any more of an attractive destination? Not really. And you look at the Bank of International Settlements numbers to see it. The dollar, yeah, maybe it's only 46% of central bank reserves, but it's close to 90% of global transactions. So, yeah, central banks are hedging a bit because they don't want stuff locked up if the U.S. gets feisty, or if China really, and in their case, it's of course very much into their geopolitics, if they want to build resistance to the kind of tools that have been used against Russia, however haphazardly, sure, but in practical global commercial terms, can you transact in gold? Can you fund global trade in gold? No. It is not remotely liquid enough. And so, is this a real threat to the dollar? No, not really. The real issue here, and I think the real case for metals, is the same case that we've been discussing for months, which is that the Fed is behind most other central banks in terms of rate cuts. It's going to have to start cutting eventually. Speculation on those rate cuts is probably supportive for gold, probably bad for the dollar, probably supportive for bonds.
Dylan, I was looking at the yuan rate there while Ilya was speaking because I couldn't help but notice that the dollar yuan rose in the wake of this agreement between the U.S. and China. Mm-hmm. Over the past several weeks, when it seemed like we were on the path to de-escalation, the PBOC was allowing the yuan to get a little bit stronger. And of course, in years past, they've been able to offset any impact of the tariffs by allowing their currency just to weaken enough versus the greenback. So when you saw this trade deal announcement come down the pipeline, what's your reaction to it? Do you think this is us really turning the corner, that we can finally put this all to bed, or do we just kick the can down the road and we're going to have to wait to see what really is happening?
I believe the second thing.
What do we need to see happen?
Time needs to pass. I just think that any fresh headline from the Trump administration is to be met with total skepticism. And so if they settle into something that lasts a year or even 3 months, then I would start to take it seriously. But a freshly printed handshake deal for a headline is almost guaranteed to get changed again. I mean, changing the deal is the primary negotiating tactic of the president. He's the king of the retrade. So we make a deal, any deal we make, the deal's always going to, then right before we sign it, then after we sign it, we got to amend it. And it's never ending. It's like a really annoying businessman where like you think you have an agreement to do something, and then every single time you interact with them, they try to change the terms of the deal permanently. And it's a personality type, and it's an unattractive one.
Oh yeah, I saw that China's putting a 6-month.
And I don't think the market cared about it, by the way. I don't think it was, to Ilya's point, I think the market's behavior today was inflation data driven and sort of geopolitics driven much more than it was China deal driven.
Yeah,
I would say, but talk about kicking the can down the road. China said that there's a 6-month moratorium on these rare earth exports. So like in 6 months' time, they can revisit levying new export controls again.
Yeah, they've put a 6-month limit on any deals they strike with U.S. buyers or just of buyers of rare earth. I'm not sure that they've said that this is only to the U.S. and let's say Europe could strike a 12-month deal. No, it seems like they've put a 6-month cap on how long you can negotiate terms on these things, which is cute because the president was all kinds of congratulatory and all kinds of let's say triumphalist, if that's a word, around this deal. But it doesn't really change a whole lot. And I think the markets basically took it like that. I mean, I think the posts on Truth Social really speak to just how nothing of a thing this is. The president saying, oh, well, they're doing a 10% tariff on us, and we're doing a 55% tariff on them. That means we're winning. Well, get into the first couple pages of an economics textbook, and you realize that that is utter nonsense. And so it's not the flip side either. It's just not how this works.
Right.
So when you look at the upshot, I mean, okay, they agreed to stop calling each other names, and we've basically reset the table for Trump to go meet Xi. We know that that's in the offing here soon. We'll see what that does, but how likely is it that we have a meaningful come down to something that resembles, let's say, late 2024 even, which, by the way, was already something that had significant tariffs on China because Biden didn't take down the ones from Trump administration version 1. So, and if anything, added other things like export controls and things like this. So how much of a de-escalation do we have here? Not much of one. This doesn't really help anybody. In fairness, it also doesn't necessarily make things worse than they were, let's say, a week ago, 2 weeks ago. So in my mind, this is optics and not a whole lot else.
Yeah, it's basically an agreement to implement the agreement that was achieved in Geneva. Okay, so that's good. We're going
to stop calling each other names on social media. Okay, thanks. It took 2 days and some flights to do that. All right.
Well, it's I guess it's a good step, right, Dylan? I mean, if we say we're going to do something and then no one actually follows through on it, they weren't sending us the minerals. We needed the rare earth minerals. We need the magnets. And we weren't getting them. So now that flow will resume. But it means that this deadline that's coming up, Ilya, right, in August, if we implement the tariffs back on, they're just going to pull the lever of the rare earth minerals. So the leverage is kind of countered. I don't know how many more legs this story has here. There is something that I saw that I retweeted yesterday after the show, which maybe some people caught, and I do need to just take a quick second to pull it up here. But the trade uncertainty is probably the most important aspect of all this, dare I say. This is the Bloomberg Trade Uncertainty Index, guys. It's kind of a fuzzy photo. Sorry, I don't have a higher quality one. And there it goes. Here we are. All right. Why am I bringing this up? The black line here is the Bloomberg Trade Uncertainty Index. The orange line, the dashed line, those are S&P 500 futures inverted. It just seems like as trade uncertainty is dying and being quelled and the can's being kicked down the road, the market's able to rally and keep rallying. So we don't have any deadlines up until the early part of July, but if we're getting this now new theoretical deadline out in December with US and China, one has to surmise that we're not going into a world, Dylan, logically, they're going to let the 90-day deadline lapse, and then all of a sudden every other country on earth is going to have higher tariff rates than what we're applying on China. That's the exact opposite outcome that the Trump administration wants to occur. That would actually incentivize people to trade more with China and less with other countries, right? So that wouldn't achieve strategic decoupling. So as long as these China deadlines and more of them stack up on the other side of this 90-day pause, one has to think that the administration is not going to allow this July window to lapse and all of a sudden give U.S. producers and consumers a huge incentive to purchase from China more so than anywhere else on the planet. That would just be...
I think it's a certainty that that won't happen.
That would be crazy, right? So what are we worried about?
That's not going to happen. I mean, forget our opinion. Like the stock market is sure that that's not going to happen.
Yeah, right? Like, so like, what are we worried about in early July then?
I think the thing that we're worried about in early July isn't that we are not going to get an extension of the truce, whatever. In fact, I think the entire conversation at this point, as punctuated by the mini deal with the UK and the talks that are progressing seemingly with Japan, are we in fact locked into a world where we have a unified 10% tariff? Is that now locked in? Because I think the issue for the markets has never been tariffs. It's been the certainty of the business environment in which to operate. It's not about, is the tariff rate this or that, as long as it's not something stupid like 145%, where at that level, it might as well be a gajillion percent, to use a technical term, because that's an embargo. It doesn't matter. So, okay, fine. It's 10%. It's 5. It's 8. It's 15. Is it certain? Can we extrapolate it forward? I think that's the question for businesses and for markets, because what they want to know is reshoring is possible because we know what the pricing structure is and we can bet that it's going to hold. And I think when you get to the other side of these cliffhangers, the danger is that with this administration, nothing is certain, nothing is ever lasting, because the president, just like this non-deal deal in London, the president is going to throw a fit. It'll be off. A few weeks later, Scotty B is going to fly to some international location where he's going to meet Chinese officials, and they'll go, okay. We've decided the president is going to stop saying mean things about Xi Jinping online. We're back to the former deal. But this kind of churn is precisely what is the issue. It's not that the tariff level is this or that. It's that nobody can actually know what it is for longer than 48 hours. That's the issue. And if you can't get there, then none of these things ultimately matter. And at some point, the market stops listening to the boy that cries wolf and stops caring that we were on a cliff's edge and now we backed away. Well, if there's no cliff's edge, because everything is always fungible, then there's nothing to back away from. If there's no reason to fear the tariffs, then there is no reason to be happy if they are canceled in the immediate term. And then you have to go back to growth and consumption.
That's interesting logic. Huh. Dylan, I know last week you got wound up literally a week ago about some of the headlines that we were seeing. I saw that our favorite entrepreneur in America, Elon Musk, issued a stark apology this morning to
See
a
that
one.
hold at resistance, by the way? The one that we talked about yesterday, the underside of that range. Where do we hold? Perfect.
Dylan, was this all theater? What was the point of all this? What did we learn from the past week of the interaction between the world's richest man and the world's most powerful man?
That they're not serious people. That they have serious power and serious influence, but they do not behave in a serious way. And it's a sad day for the world. Also, we learned that money has no correlation with character, dignity, or even intelligence. And I think that one of the great disservices that we see in our society is the mistake of assigning a higher level of competence and qualification to people who have more money when there's literally no correlation. If anything, sometimes the more money someone has, it's an indication of negative character traits, not positive ones. But if anything, it's not an indication of character traits or competence in any way, shape, or form. And Elon Musk is a perfect example of that.
The stock is basic. Go ahead.
No, go ahead. No, you go ahead.
No.
I'm just saying, it's not to say that I'm not suggesting he's not competent as a leader of companies, but I'm saying he's not competent as a public figure.
It sort of highlights for those of us, and Chris, you and I have been doing this dance for a long time, speaking with, let us say, a more retail level rather than a more institutional audience. And so we've seen this up close and personal. You meet folks that are just starting their journey in the markets, and more often than not, these are very accomplished people because they have money to trade with. They have disposable income to put at risk. And these are people that are maybe in their 40s and 50s that have accumulated some wealth that they now feel comfortable with risking some aspect of their capital in a more active, hands-on way. These are doctors. These are engineers, very competent, intelligent people, thoughtful people. And you put them in the markets, and it's a completely other thing. And those skills are not necessarily going to make you a good active participant in markets. You train, you learn, but there's certainly no shortcut to saying, you know what, I was a competent entrepreneur, or I was a competent engineer, or I was a competent doctor, and I'm a thoughtful, strategic, tactical individual, and I know how to manage and to transfer those skills into markets. Being accomplished and good and successful in your field very clearly does not make you a good practitioner in the public administration sphere. And that these skills are not transferable is very clearly on display here, I think, to Dylan's point. It's just a very, very dramatic demonstration of just because someone is a great businessman, a thoughtful engineer, a daring and successful entrepreneur, that does not make you a good politician or a good administrator of public policy. And it's really high time we ought to stop saying, oh, well, that's a good businessman. The government could really use being run like a business. Nonsense. These are completely different skill sets.
Yeah, you mentioned that there's a guy who's the new head of the Social Security Administration, Frank Bisignano. I don't know if I'm pronouncing Bisignano. He joked recently in his opening remarks to the Social Security.
I definitely can't.
It's Italian.
Like I say, if you can't pronounce it, I definitely can't.
He said in his opening remarks to the Social Security staff, he's like, yeah, when they told me that they were, nominating me for this position, I had to Google it.
Yeah.
Okay. So this is clearly not an expert in the field.
I mean, the FEMA director apparently was recently enlightened as to there being hurricane season in the United States.
Well, I mean, so Elon Musk is now back in with Trump, but he's never going to be back in the circle of trust the way that he was before, right? It's broken, but he's back on the ends. Whether or not the EV tax credit gets removed, Elon Musk has been saying for 7 or 8 years now, it's all available on Twitter. I hate that I'm even in the position to defend the guy, but he's been saying for 7 or 8 years now that he doesn't want EV tax credits. And I'm partial to the belief that that's probably a smart business move on his part at this point in time, because his company can still make money, whereas a lot of the other car companies, the traditional OEMs, they have not been able to get their EV units off the ground in any sort of profitable way. And if you kill the EV tax credits, you basically are going to kill the desire for companies like Ford, Stellantis, GM to delve too deep into EVs anymore moving forward. It's kind of like Elon Musk, he was in a pit, someone threw him down a ladder, he climbs up, he just pulled up the ladder, and everyone else is still stuck in the pit. But this has been his mindset for more than half a decade. And so these accusations that he did all this because he's upset that the EV tax credits are going to be removed, I just think, again, it's disingenuous. That's not where this is coming from. I don't know where it's coming from, quite frankly. But I would say that if we're back into a place where Musk is in Trump's good zone, why wouldn't this thing keep rallying, Dylan? And we had the discussion yesterday, robotics, self-driving cars, again, just making the rounds. I asked another 12 people yesterday between yesterday's overtime and today, what did you think of the riots? 7 of the 12 people told me, I have my notes here, 7 of the 12 people asked first, did you know that we had self-driving cars? So,
no, I think that if anything, I think it all holds. It was a buying opportunity when it happened last week.
Crazy.
And it is still best in class for the most relevant non-AI tech vertical in the world, which is transportation tech.
Transportation tech. That seems to be your theme for the second half of the year, perhaps, for the week.
Yeah. Well, now, for sure, I'm grinding it like crazy this week. We'll see how long it lasts. But I just think transportation tech is, like, as you know, I said my piece 1,000 times, but sure. I just think it's really good for Tesla. Tesla is it. And arguably, Tesla invented it.
Yes, they did. Oh, well, they certainly perfected it before anyone else could. We didn't get to this earlier, by the way. Oracle had earnings here after our share prices are up to 187 and change. They closed at 176.5 at the end of the session. It's about an 8% rise. EPS was 170 versus 164 expected. Revenues 15.9 billion versus 15.59 billion anticipated. So that's an 11% increase in revenue during the fourth quarter, which kind of like our fiscal year ends on May 31st. Their net income was up to 3.43 billion from 3.14 billion. They say that cloud infrastructure revenue will increase by more than 70% of the next fiscal year, up from 52% in this quarter. I think that's the line that I'm paying attention to more than anything else. Microsoft is basically the only company right now that has carved out AI when they talk about their earnings. And they list it as a separate line item than cloud computing services. So Oracle is still incorporating AI as part of their cloud infrastructure revenue, and you're seeing that growth rate accelerate, right? 52% now projected to go to 70. Ilya, that's what you've said has to happen for a long time. If you're going to feed the beast, you have to see not only continued growth, but also like faster growth, because we're getting hungrier. We need more. It can't just be beats. It needs to be bigger beats and more growth. And at least Oracle here on the other side of their earnings is giving that impression here today.
Yeah.
This is a pretty good report at 187 and change. This is going to be the highest level that we've seen since going back to late January here so far. Worth checking in on here. Although, Ilya, we're going to quickly pivot because I like to scan some of the headlines on like Fox Business News, CNBC, Bloomberg, as we come into the end of the show and find something for us to discuss that maybe someone listening to this would find over the course of their reading during the day. 4 things trending now on CNBC.com. 1, JP Morgan's Jamie Dimon warns U.S. economy could soon deteriorate. 2, shadow Fed chair could be coming. Who could it be and how might markets react? 3, tariffs on China won't change again, Lutnick says after trade talks. And 4, Bessent floats extending tariff pause for countries in good faith trade talks. I think we've already covered 4 here today. Dylan, which of those 3 stories is worth discussing, or all 3 just nonsense that traders should not even bother paying attention to?
I think all 3 are more nonsense. I mean, I just really, I believe I'm holding on to my full bull. I believe you've got 2 tech pillars, not 1. And I believe that the economy continues to be vastly stronger than anticipated. And you should be so lucky to be a long-term holder of all these stocks. And from a short-term trading perspective, I still think Tesla has the most juice in it. I think Apple's the most boring. And the most interesting trade from the day, or the most interesting trade opportunity developing today, goes back to the top of the show, which is oil.
The story's got to be oil, Ilya. If it's none of those stories, right, I'm going over to Bloomberg. Treasury takes aim at hundreds of colleges' tax-exempt status over race. Trump says China will ship rare earths and done trade deal. EU likely to be at the very end of the U.S. trade deals. It's trade-focused, I suppose. Fox Business News is all about Vance calling for the Fed's Powell to cut interest rates, calling it monetary malpractice.
Yeah, okay.
These are 3 different audiences, but they're all retail-facing business news.
Sure.
For the sake of the conversation, just which traditional mainstream media financial group is on the right beat today? Is it CNBC? Is it Bloomberg? Is it Fox Business News? Which is the most important story for us to walk away from today with?
It doesn't really seem like, frankly, that there's really that much of a difference. I think what you don't see today in any of these things is anybody trying to explain why, with the headlines that we have out there today, stock markets finished lower. Why none of this really held up today. CPI was good. Markets liked it. China deal is a good thing. Markets didn't stick with that one either. The surge in oil, I guess, is something. But if you look at the sort of dynamics here today and you see when things happened and sort of when things started to move, you get the rise in oil starting relatively early, already by, let's say, like 9 GMT, oil starts to power higher. And you don't really get a response that's negative from equities until much later. Now, granted, there is a spike around 1700 GMT, and that's where stocks take a leg lower. But that's hours after they digest the China deal, hours after they digest the CPI data, none of which really gave them much optimism. They were just drifting after a while. And so, yes, the reason you have a underwater close to the extent that you have probably has to do with oil. I think you're right on the money there. But that's, as we've seen, I think, 1,000 times now, probably nothing. It's probably an overreaction. But let's say it's not. Let's take it at face value. Hours before that, good news did not give these markets a reason to rally. So what is it that they're not liking? What is it that they see that they don't appreciate? And I think that's the real story. And I'm waiting. I mean, maybe the Wall Street Journal will have a good conversation about it. Maybe The Economist will have a good conversation about it. The Economist has a really great rundown of Section 899 buried in the Big Beautiful Bill Act, which would be essentially something that's colloquially, if I can get that word out, being called the revenge tax, where foreign holders of U.S. assets would be taxed on those on income from those holdings. And while you have
To be terrible for the equity markets. Terrible for the equity markets. Let's just put it on record. If you're a bull, that's not something that you want to happen.
No, this is not what you want to happen. Now, thankfully, there is an exemption on the books that would prevent this from applying to coupon payments on treasuries unless that exemption were repealed. So it's interesting. It'll be interesting to watch if there's conversation about that exemption getting repealed, because then we have a catastrophe on our hands, because then there's basically, we're punishing people for financing our debt, which is insane. But if you want to tell people diversify from U.S. markets, well, then pass this bill, because then people get punished for owning U.S. stocks and getting paid dividends on that stock. Now, it's not the greatest punishment ever, and people aren't going to fully abandon U.S. markets because they are 60% of global equity market cap, give or take. So there's not that many places to go. But we do have all kinds of sort of real stories out there that are real hurdles for markets. And the non-deal with China, deal, no deal, whatever that was, isn't even on the radar, really. The real issue is, are we going to, in addition to now barriers on goods crossing borders in a reasonable way, are we going to now do the same thing to capital and essentially establish what are, by another name, capital controls?
Capital controls. Oh, boy.
No way. 0.00% chance.
It's in the bill.
But that's directionally where it's pointing, though.
No way.
Bill.
No way.
I very much want to have Dylan's optimism, and then I see the Marines in LA, and I go, well, we are not beyond
big signal.
We are not beyond stupid here.
Man.
The Section 899.
We are beyond stupid, though, when it comes to money. I think we are beyond stupid when it comes to money.
I really hope so. I really hope so.
So and Section 899.
I think there's compelling evidence to think that Dylan's right.
I mean, look at the tariff reversal. And everybody thought he was going to do all these tariffs. It turns out he wasn't going to. I mean,
he's doing a 10% tariff, which is a lot more than 2.
But it's not. And it's nothing like what he was talking about.
But it's not the foam board.
Okay, but this is it's still ridiculous. Section 899 would allow the U.S. to hike existing levies for countries with unfair foreign taxes by 5% a year.
Whatever the hell that means.
Yes.
Nice and loose.
This means under tax profits, which is
nice
part of the global. The under tax profit part is the definition the Trump administration is using is for the global minimum tax that was negotiated by Janet Yellen and Joe Biden. But it also includes digital services taxes, diverted profits, and blindly any new levies that could arise. So arbitrary and capricious. I mean, why would people want to invest here if you could invest in all of a sudden? Yeah, it's aimed at you. It's aimed at Ireland for taking all of our pharmaceutical companies. And you look at Irish GDP. You're like, how is Irish GDP so high? Oh, it's all accounting. Okay. Well, you know what? We have more to cover tomorrow. We're done here today. Ilya, you'll be back after this for Macro Money. So with that, though, I guess overtime's out of time. We'll see everyone tomorrow, same time, same place, 4 p.m. Eastern, not 1 p.m., 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak and Dylan Radigan, I've been Chris Vecchio. Good luck trading. Stick around, though. Ilya Spivak up next here on Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What do you do to keep emotions and psychology out of trading? Do you have any specific strategies on that front?
Absolutely. I try to get away from the screen a few days during the weekend, try not to look at the markets, let my mind reset, come back with fresh eyes on Monday.
I guess I don't. I used to say that my mood would rise and fall along with my P&L. So I'm not sure if I've ever really grown up around that, Money is one of the most important things out there, so I just don't.
Still learning, for sure, because you can't underestimate that effect. Bracket orders, putting in stop losses wherever you can, especially when trading things like futures, lifesaver, because you let it run too far too fast, and then you're trade managing where you didn't think you would be. So definitely upon trade entry.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There's a phrase for this. When the time comes to buy, you won't want to.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Well, we have a trade deal, maybe, that's been restored with China, and the inflation data is not as bad as people were thinking it might be, but the markets are not particularly enthused. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live, and we're going to try to figure out what's going on here and what these markets took away from all of this information and whether they had a reason to rally and should have or maybe didn't and might. That's the front of mind question here, and we'll focus the discussion with a check-in on China whilst they're in the conversation and grabbing headlines, because needless to say, this is a very important part of the overall macro puzzle, this trade war between the world's first and second largest economies, the U.S. and China. And so it's right on time for us to check in on just how that economy is doing and whether they're giving us something that's a little bit more encouraging to look at for the global story writ large. So let's take a look at first what came out of today's news flow. The inflation data out of the U.S. came in a little bit cooler than expected, 2.8% on core. That's excluding energy and food, 2.4% on headline. We can see here that that's a little bit cooler than was expected, though it is an upturn from April's numbers. 2.9% expected, 2.5 on the headline. So these numbers were a little bit more encouraging. Looking at the internals is really where the meat of the story seems to be, because once again, as in May, these are refreshingly normal kinds of numbers. So if the concern was that we were going to have some sort of an inflationary spike on the goods side, thanks to the tariffs that have been levied, then we don't have that here again. The contribution from the goods side to overall inflation, just 0.05 percentage points. It's a little bit higher than the 0.02 percentage points in April, but still not a whole lot to look at. The numbers for food and energy basically in line with recent averages. Energy, a disinflationary contribution by a similar margin as the previous month. Food, same thing. The bulk of inflation still buried in services, 2.21 percentage points of the 2.4% overall headline figure right here is services, and about 0.19 percentage points is everything else. So when you look at all of this, you get a sense that maybe things are relatively okay here, and we don't need to be concerned. But of course, we saw this movie in April, and when the markets had this 2.3% number, 2.8% at the core, which holds steady this time around, the market said, oh, goody, everything is normal. Everything is mostly in services. Everything over here is still subdued. So no real change from the recent dynamics. Everything still looks about the same. But then, of course, we got the PPI data, which told us that the reason we didn't see it in consumer confidence, and this is for April, we haven't gotten the May ones yet, That's tomorrow. We saw that there was a shock negative reading here, and what that reflected was this dramatic 1.6% negative number on PPI for services. And the services in this particular context speak to trade services, that is the cost of moving goods around the supply chain, basically the cost of getting them from where they're made to where they're going to be sold. And what this shows us here is that it's not that the inflation didn't come as a consequence of the tariffs. In fact, we can see it building right here. And if you look at this errant spike here in 2023 as a reference point, then it's the highest in 2 years. And if you don't, then it's the highest because, after all, it is just 1 month here, kind of a one-off. If it's not that, then the reference point is this sort of COVID inflationary scare right here. So it's not like the inflation didn't come. It's just that businesses ate it. They just accepted lower margins. And by the way, significantly lower margins to shield consumers. Then, of course, we also saw that retail sales did not match the jump in March. In April, retail sales basically ground down to a halt. And the upshot, of course, then was businesses shielded consumers from inflation as a consequence of these tariffs, and consumers still didn't come. The increase month on month in retail sales was just 0.1% in April after a 1.7% surge in March. So it's not like consumers are beyond front running the tariffs, but even when in April they were shielded by businesses, they did not continue. That, of course, is the real story here, and we'll see if these seemingly benign CPI numbers are again smoke and mirrors for the situation just being held back at the wholesale level and being more of a problem for businesses than for consumers for now. So the markets rally on this briefly, but that only holds for maybe an hour, and then comes unraveling, and we end up with fractionally lower closes. Some of that is perhaps driven by a spike in crude oil around some evacuations of embassies around the Middle East. But we certainly don't have the kind of optimism that might be lasting as a consequence of inflation being a little bit more supportive. And indeed, Fed rate cut expectations looking a little bit better. We're a little bit closer to matching the Fed's outlook. It's 45 basis points apiece this year and next. That's only 5 points light from what the Fed was arguing for, which is 50 basis points apiece. So we're basically at baseline for policy expectations, but the markets don't run away on this. In fact, they sort of pointedly jump to a 4-month high and then retreat. The next bit that might have been positive news is the deal that was ostensibly struck between U.S. negotiators led by Scott Bessent and Howard Lutnick, the Treasury and Commerce secretaries, with Chinese counterparts in London, where there was a deal done in Geneva, at least in words, and then the president got into a war of words with China's President Xi Jinping again, and the deal was ostensibly off, and now we've just had talks in London where things have kind of been resuscitated and we're back into a steady state, a kind of day after Geneva sort of setting, and it is against that backdrop that it seems to make sense to check in just how China's economy is doing and how the world economy is doing. Because this entire situation really has to do with, are we going to get some help on global growth, either from fiscal policy or from monetary policy? Because the question still is, are we going to be able to duck recession as a consequence of everything that's going on around the world. And we once again come back to the idea that the global economy is really powered by three engines: the US, the Eurozone, and of course, China. With the US the largest, at just over a quarter of the overall pie, China 17%, Eurozone 15%, the rest of the world 42%. So between the three major economies, we have 58% of global GDP. And when we factor in that the remaining 42% are mainly vendors to those three, they depend on being able to export to those three and into the supply chain that feeds those three. So think about, let's say, a commodity producer like Australia or Chile selling things to China, which then end up getting turned into more finished goods for selling in the Eurozone and the US, of course, mainly the US. And so all of these things really depend on end demand in rich world countries, mainly the US and also Western Europe. And without them, without that demand, the rest of world 42% don't really have much of a contribution to make independently. So it's really the top three, with China kind of in the middle of the supply chain, but because of its size, still vastly important, that we need to be watching to see just how real the threat is looking. And now that we've gone through the PMI reporting rounds, both for S&P Global and for sort of alternative measures, the U.S. has ISM, China has the official numbers from CFLP and NBS, in addition to the S&P Global numbers, we can get the sense that the global economy is doing XYZ thing. And of course, we can see here very clearly that the story since the beginning of the year has been the U.S. decelerating and approaching the standstill that we have on display in both China. We have both measures of PMI here. They're basically versions of standstill. The official numbers a little bit weaker, 49.6. The S&P Global numbers a little bit higher, 50.4. But of course, in the logic of PMIs, 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. Readings plus or minus a little bit, but pinned to 50, tell us that China's economy is at standstill. The European economy is at standstill at 50.2. And so we saw that this has been something that's been the case really going all the way back to early last year, where through the first half of the year, we had this deceleration in both the Eurozone and China, and we got to standstill, and we've basically been sitting there since. The story for global growth was a robust and strong U.S., which by the end of the year was growing at some of the fastest rates that we'd seen going all the way back to 2021, 2022, over here. But with tariffs and with all of the various things that have beaten back business confidence and consumer confidence, we've seen a significant slowdown. Now, for the month of May, we have a little bit of an improvement in the U.S. story, although the trend still points lower. Output seems to be rebounding, or the pace of economic activity seems to be rebounding a little bit, looking at the S&P global version of the numbers. But the anemic situation elsewhere remains. And the data that, in particular from China, that we've seen is the most eye-catching. Now, for the Eurozone, yes, we're at standstill, but even the ECB last week said, as it cut rates, that it's nearing the end of its cutting cycle because next year we're going to have all these outlays on defense spending, and that's going to boost both growth and inflation. And the euro is higher for it. So perhaps the story is on track to change there. But for China, the situation's still very anemic indeed. In fact, just to run through some of the data that we saw this week so far. We're looking at inflation that's in negative territory, headline CPI at 0.1% on the downside, negative 0.1% for a third consecutive month, whereas the wholesale price index, PPI, staying negative, but more importantly, dipping deeper into negative territory. So at down 3.3%, we have the most negative reading on wholesale inflation since July of 2023, which of course tells you that price pressures not only are negative, they're waning. They're turning more deflationary. Generally speaking, when there is robust demand, prices rise to reflect that demand as would-be buyers of stuff compete for that stuff, and there's of course a finite amount of stuff at any given moment in time. So when demand outstrips current inventory, current supply, prices rise. When we see negative prices, it is the opposite. That is to say, demand is weaker than current inventory and current supply. So we're seeing that wholesale prices here going negative just tells you that demand in the pipeline at the wholesale level is exceedingly weak, whereas demand at the retail level, that is consumer prices, has been basically an anemic flat line going all the way back to, let's say, the middle of 2023 and has made absolutely no headway since then. Looking at imports and exports, we still see a little bit of a positive reading on exports, 4.8% year on year. But of course, that now takes us to the bottom of the range that has prevailed since the middle, let's call it, of last year for export growth after some pretty heady numbers here. At one point, the numbers were even in the double digits. The March figure was north of 12%, then a fairly strong 8.1% in April. But we've now come back to the bottom of the range, telling us that whatever front running of the tariffs there was is perhaps running out of steam. Meanwhile, the import side, that is a reflection of both the buying of inputs to feed that front running of tariffs and also to feed domestic demand, that might be fizzling back to negative territory on imports. Data upcoming for the next several days, due early next week. Industrial production seen cooling down to 5.5%. Retail sales seen cooling down to 4.7%. To put this in a little bit of context, 5.5% industrial production growth would be the weakest since November 2024. 4.7% retail sales growth would be the weakest since February of this year. So meaningful downdrafts on both measures of economic activity. And of course, all of this boils down to the story that we've been talking about for a while now in GDP numbers. So China's economy here still telling us, as of the first quarter of this year, and indeed, we can see here, these numbers have been negative now for 8 consecutive quarters, that real GDP growth, that's this solid line here, is running hotter or running above than nominal GDP growth. Now, nominal GDP growth is calculated as real GDP plus the influence of inflation. So real GDP takes inflation out of the picture. If real GDP minus inflation is higher than real GDP plus inflation, that tells you that the inflation component is negative. You can see that right here. This is the spread between the two, and what you're looking at here then is quite a sizable negative read, which basically tells you the economy as a whole is in a deflationary malaise. Now, we just talked about what this means, but to kind of put a clear point on it, it is as though the entire economy is in the bargain bin. It's on discount. Prices are falling because there isn't demand to clear these inventories. And so prices are declining economy-wide to try to stoke that demand. And for 2 years straight now, it isn't working. And the economy is basically idling at standstill at best, but struggling to have any kind of growth of any kind at the economy-wide level because there's a near total absence of uptake. And all of China's various stimulus efforts seem to be perhaps starting to show a little bit of light at the end of the tunnel. This is Bloomberg's measure of the share of new loans in GDP, the Credit Impulse Index. And for the first time in quite a while here, what we see is that there is a positive contribution from new loans to GDP in April. Now, in year-on-year terms, we have a rise of 4.2%. That's surely better than all of the negative numbers, and this is the first positive contribution from new loans to overall GDP since January 2024. So this is perhaps a little bit of good news. But when we look at what all of this translates into as far as actual consumption, we see that the spread between new money going into savings and new money going to consumption continues to get worse. The yellow line here is household time and sort of similar deposits. So think of this as savings and CDs, and in U.S. terms. And this is demand deposits in the red. That's essentially the equivalent of a checking account. So this is money earmarked for near-term consumption. This is money earmarked for saving. We can see the spread of new money going into saving versus consumption is widening and widening and widening and widening to tell you that there is really no impetus to consume from Chinese consumers. So yes, maybe we have some more activity here. Maybe people are starting to take some of this loan money, but it isn't exactly going toward consumption, and it isn't going toward feeding the economy. You can see that here. So with all of this in mind, we are left with a picture where the U.S. still looks like the most important game in town, and all of these talks between the U.S. and China may not be all that important unless they were to really clearly create certainty and really clearly open the spigots of trade between these two economies to try to generate some more activity. But in the meantime, we are in a situation where both China and Europe remain anemic, and of course, this deal with the U.S. doesn't particularly tell a positive story about where China goes from here because it doesn't really change the bottom line for their consumer sentiment. And if the story in the U.S. is a little bit positive in May, we're going to have to see quite a bit more of it to get out of the woods here on this global recession risk, because still, and as we've looked at for over a year now, if this part of the story falters, there is no safety net. And that the markets are not celebrating lower inflation with perhaps hopes that the Fed will do something about this, that might be telling. And that is macro money for today. as ever. We are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise on with Victor Jones for the Price of Truth on Tuesdays, on with Chris for Futures Power Hour Mondays and Fridays, back with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Happy trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
If you had to buy and hold one stock for the next 365 days, what would it be and why? If you had to buy and hold one stock for the next 365 days, what would it be?
Aside from our own company. So if I had to buy one stock from now, 1 year from now, that might go up on a percentage wise, I think I'd buy Intel. I know you're going to hate that. I know everybody's going to hate that, but it's a $20 stock that I think is going to go to like 25. It's a nice little 25% kicker. If I had to buy another stock that's like in the same price range, I kind of like Southwest Airlines here.
Gosh, I know it's such a divisive stock, but I would say NVIDIA. It's just one of those interesting names that I think is sort of forward-looking, and the stuff that they're doing with chips and obviously the AI revolution. I've always thought that was fascinating. So it is definitely one that I think is here for the long term, and that's one that's interesting to me.
Tom said Intel. You have any thoughts?
Well, that would make sense. Tom is an Intel type of person. I mean, Intel started what year?
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
All right, we're back. Part 2. I'm Dan. This is Shelly. What's going on?
We look stupid on our art cards, so there's that. But how are we doing today? What's up, chat? I see some friends from earlier. We're running quite a bit today. People are going to get sick of us. We got Lone Sophos in the house, Chaz, Katan, Dave, Dav, Nico. Hello. Saw you earlier today. Welcome, everyone. What do we have? Oh, I have a question for the chat.
Yeah, get a question out there.
So, okay, this is serious. How do you eat a muffin? Like actually a muffin. No innuendo here. Like a wrapped blueberry muffin. How are you eating it?
I'm biting into it normally. Like I'm unwrapping the whatever, the holder, and I'm biting into like the top.
Okay.
I'm not taking it apart and like putting butter on it like I see some people do.
Okay. So chat, you got to answer. Is it like a top-down situation? Are you leaving the wrapper on and just diving in? Are you, with my mouth? Because 2 people in my family I witnessed eat a muffin this weekend and was like, what kind of savages, what's happening here? The wrapper was left on and they just, and I was like, what? Appalled. Because I happen to think that the muffin top is like the best part. So I actually take the wrapper off and eat the bottom first and then save that for last.
Interesting. Okay. Yeah, no, I'm eating it like a cupcake. I just bite right in.
Okay.
So we have tear off the top, eat the bottom.
Oh, MP is my people.
Okay.
Tear off the top, eat the bottom, the top last. That is the correct way. I approve.
Okay. So
Adam, yep. See?
Ryan Watson, eat the top, then eat the rest after unwrapping. Okay.
That's a little bit savage. You just, but yeah.
We have JDD wasting food here.
Whoa. Animals. All right.
We'll segue into real market talk. If you were with us this morning, we went through some of the market dashboards. We can take a look again at some of that. And just some of the performance over the last week. This was updated this morning. So Bitcoin around the $110,000 range, 17% up year to date. A lot of price momentum, daily, weekly. And then ETH. ETH, I said this morning, ETH is catching a bid, I think. So Ryan put on some trades if you're on the follow feed. And I think that if you look year to date versus Bitcoin, it's still down 34%. So a lot of room to run there. I do think we're kind of we're at the beginning of, I think, alt season. I have no other reason to say that other than I just think it's kind of, we're getting there.
Yeah, I've seen a little bit of life in my bags, which is
right.
Been a while.
Yeah.
It's been a rough ride, but not my first
also
bear market.
Ripple. Weirdly, Ripple is always kind of has maintained some momentum.
Yeah.
So, we'll go through these real quick because we went through them this morning. Aave, Link, that was one of my calls of the week if you're on the newsletter. Sui, maybe Aptos is one to look at too. That's underperformed as far as like these alt layer ones, newer blockchains. So definitely one to take a look at. Let's see here, Algo, AVAX, Avalanche too. Yeah.
Yeah, that's been on my radar a little bit too. I am keeping an eye on it.
Yeah, because there is a bunch of stuff going on over on Avalanche chain, and I do know people are using that. So take that for what it is. Maybe that catches a bid soon, and we all will be happy. Here's the relative performance.
Bitcoin dominance.
Yep, Bitcoin dominance, ETH BTC. Again, I think we see on the 1 month that's up 28%, 3 month still down 3%. That ratio I think is changing, or is sort of flipping because it's been down only for I think over a year now. We'll have to bring up that chart at some point. But I think relative performance. Also, we'll have to throw in a couple other symbols because I think this is a really interesting chart to map things against Bitcoin. So there's your relative performance and volatility. Here's the ranges. This is in the midweek update.
Yep.
If you get our newsletter. So Bitcoin range between 102 to 115. Seems like that's breaking out. Implied volatility for 42%. ETH, high implied vol, premium rank. Yeah. So I like I said, ETH is above 2,800 now. Last I checked. So we're looking at that 3,000 mark. Get back up to that 3,000, my bags will be happy. So anything you want to call out?
I got a little bit in the trenches a bit, so I've been moving things around, which might not be the best move, but we'll see. So I'm not going to publicly announce my moves just yet, but
Okay.
there will be signs, one way or the other. What up, Jose? Great to see you. Lone Sophos. We got some friends in here. Yeah, talk to us about the ETF flows.
Yeah, so I thought this was interesting. I get a daily newsletter that goes through some of the major news, both deep in crypto and then like broader markets. So ETF flows. Yesterday, June 10th, Bitcoin ETFs. So all of the Bitcoin ETFs, not just IBIT. They saw 431 million in flows, but more interestingly, ETH ETFs, 125 million. It's only the second day in June, or since June 3rd, most flows in a single day. So I do think, like, again, I think there's some signs here, some early signs here that ETH might be kind of catching up a bit. And then this was shared in the Cherry Picks newsletter. If you're a follower of Cherry Picks, they do some great content. Dr. Mike and Nick, Dr. Data and Nick. This was shared, average dollar traded per day, $2 billion worth of IBIT trading per day, which is just absolutely absurd.
Yeah.
As far as just like an ETF product. I think I said this earlier. It's the most successful ETF product launched, more successful than gold and some of the other ones that were launched. It took only like less than a year, 6 months to get to like $70 billion of, I don't know, volume or whatever the metric was, but it's a hot ETF to trade. So I know we trade some options on that, and it's a good proxy for, it's a good vehicle for people to get access to Bitcoin that might not be into holding crypto themselves. But if you want to hold crypto yourself, we can help you with that. So we can help you with that because we could show you how to enable crypto at Tasty Trade.
Excellent segue, Dan.
Yeah.
Smooth sailing.
Do you want to talk through some of this?
Sure. So, are you ready to trade crypto at Tasty Trade? Is the question. Have you enabled crypto trading through Zero Hash, our partner? And it's easy to do. It's just, you got to do it. So, Dan, are you going to show us?
Yep.
If you want to do this on your own, there is a how-to video on the Tasty Trade YouTube account. If you just do a search on that channel for crypto, it'll come up. And yeah, you just go to your Manage tab, and then, I can't see your screen, there we go. My accounts.
Trading preferences.
Yep, and there it is. Trade cryptocurrency with Zero Hash. Just click that Enable button and start that process. I can't remember what the actual process is, but...
I think you have to do some basic re-verification of KYC for that. I don't think it takes that long. I think that you'll probably be approved same day. I think our accounts team will review it. If you're on mobile, I do believe it asks you to like do the picture of your ID. So it's like a basic form of KYC just because you're actually opening an account with Zero Hash. So Zero Hash is our crypto provider as far as when you can transfer spot crypto in via your a custodial wallet. So if you do that, that's manage my account's trading preferences. So we hope if you don't have it enabled, you do get it enabled because we got a lot coming to the platform, crypto specifically. And then let's see what else we got here.
Yeah, your other call to action is, are you following Ryan?
Yes.
On the follow feed, because I did a deep dive into everybody on here. Him and Tom are the only ones trading crypto. You got a lot of these traders sleeping on crypto. We're going to be running around with some noisemakers in the office. It's going to get loud up in Tasty Land. So go ahead on over to that follow feed. It's from the trading tab. You go to the left sidebar, follow feed. If you need to, you toggle up that traders thing from the bottom, select Ryan, and there you go. You can watch his trades. He's going to be far more active now that we've got him on the feed and it's working. So he's the big brains of this outfit.
Yeah. Yeah, he actually thinks through his trades instead of just aping like I do.
Yeah. And
but on a more serious note, if you are unsure where to start with spot crypto, maybe you've done IBIT and strategy or some of these Bitcoin proxies, and you're like, okay, this is fine, ETH, but you want to go deeper and you want to trade some of these altcoins. I do think some of these altcoins will catch a bid. We've added 20 to the platform. We got a bunch more coming each week. This is where you do it. That's why you want to be enabled for spot crypto. So if you don't know where to start, I would just track Ryan's trades because he'll be putting them on weekly. And he recently, what did he do? Yesterday he closed his compound trade, and he bought some ETH. So thought it was a decent entry on ETH, and we'll see where it goes. So we'll be adding to that probably weekly. He'll be placing a trade at least
weekly, yeah.
Yeah, if not daily.
Yeah.
So again, if you're not sure where to start and you need
ideas,
we're on the Ryan's crypto trades are on the follow feed. So and then also, like I said, the newsletter, I'll drop a weekly pick of the week. I do just kind of a little write up on what I'm paying attention to. Could be on the platform, could be available through the Tasty Crypto wallet. So I like finding stuff early and going deep into projects. And, I think alt season's coming around, so you definitely want to be enabled for spot.
Yes, sir. What do we got next?
I want to quickly show the ETH chart because I showed this morning. Let me get the chart up.
Excuse me.
There I am. This broke above the 200-day moving average. So this pink line here, if you're just a basic technical indicator, it was in this kind of like range, and it just broke above. So I think that's kind of a short-term signal that ETH is catching a bid and something to pay attention to as far as ETH spot, ETH USD. Maybe you want to trade the ETF. I personally am a spot holder because I like going and doing DeFi things. You can transfer out to a wallet from the Tasty Crypto platform, Tasty Trade platform. But just wanted to show that real quick. Short-term signal broke above that moving average. I do think it's catching a bid here. So just wanted to call that out if you got anyone's interested in taking a look at ETH. So what else we got here?
So the How to Follow Ryan's Trades is also on our Tasty Crypto YouTube channel. So if you're not subscribed to that channel, please pop over there and do so. We're going to have a whole lot more like bite-sized nuggets of how-to clips that just make things easy. And if you ever have questions and you're like, hey, how do I do this? Let us know. We'll create a quick video for it. And we'll put funny rodents on the card. But we did have a question earlier about how to transfer crypto. Okay. So you can maybe run through that really quickly.
So transfer in or out, right? Okay, so this is something, and I think we're going to do more. We have more education videos coming, but the way to do this is to go to manage my money crypto transfers here on the left-hand side. And if you're looking to transfer out, you need to add a wallet. So wherever you're looking to transfer out to, we only support withdrawals, Bitcoin Cash, Bitcoin, ETH, and Litecoin right now. We'll be adding more soon, but those are the 4 pairs that you can do withdrawals on. Actually, that might have updated.
I think it did.
It did update.
If you actually go through the process, it'll go down that list.
There's a quick disclaimer, and then from here you select your asset. Yeah, okay. So withdrawals, adding a wallet, Cardano, Bitcoin Cash, Bitcoin, Dogecoin, Polkadot, Ethereum, Litecoin, Solana. Enter your wallet address. So if you're doing ETH, that would be a 0x address, and then name it. So if it's your Tasty Crypto wallet, name it Tasty Crypto. and then paste your wallet address in there, and then you can get it whitelisted. So your wallet needs to be whitelisted for transfers in. Our team will take a look, just make sure it's all good, and that's kind of the way it goes. JDD, do transfers in need to be approved as well as adding the wallet process?
Transfers in. That's a good question. We'll have to follow up because I am not positive. And there's a lot of moving pieces happening on the transferring in right now.
Yeah. So JDD, the wallet, once it's approved, it's whitelisted. So it's tied to your account. And then that's transfers out. They do need to be approved, but it goes through like a quick check. Like I said this morning, it's just a scan to make sure like they know where it's coming from, and you're not
a flagged wallet
or whatever. But typically, if anything gets hung up there, if you just chat into our support desk, they'll take care of it pretty quickly. So yeah, this is where you get whitelisted wallets for withdrawals. Deposits are here. This is what I want to go through earlier. Bitcoin Cash, Ethereum, and Litecoin are where you could deposit. So click ETH. There's your wallet address. So this wallet address to transfer in, deposit, is tied to your Tasty Trade account. So this is a funding mechanism. Here's ETH. Like I said, 0x address. This morning I said I checked the first 4 or 5, and I checked the last 4 or 5, just to confirm that that's my wallet.
Good habit to get into.
Good habit to get into, because if you send it to the wrong wallet, there's nothing we can do. So just like sending a wire to the wrong place. So that's just kind of a quick way to know how to navigate the cryptocurrency transfers section. And again, the reason why I think this is great is it's an instant funding mechanism. So 24/7, these will come in. You can fund the account anytime you want. If you have money at Coinbase or some other crypto exchange and you want to bring it over and trade options and trade other products, this is a great way to get the money over pretty quickly. So just wanted to touch base on that, show you guys how to do that. If you have any other questions, feel free to hit us up in the chat or email us, and we'll walk you through it. If you ever have an issue, email us, chat us, we'll take care of it. So
Grumpy Mike is asking what rodent that was on the slide.
That is a beaver.
Oh, it does look like a beaver. I was like, is that a very angry gerbil?
No, that is a beaver.
Beaver. Okay. Well done. Dan knows his animals.
Yep. Anything else from chat? Any trade ideas, anything you want to know about the space, feel free to drop it because we're happy to answer it. Got a couple minutes left here.
Let's go through that email. We want people to know we've got 2 emails going out a week. Subscribe, get on the list. The market update, the midweek market update is sent on Wednesday mornings. And then on Saturday, next to Orange, is our comprehensive weekly update. It's entertaining. It's educational with like normie-friendly content, so that if you feel very confused or intimidated by the space, we're trying to make it very easy to understand. And kind of our pride and joy.
Yeah, we're growing that list pretty regularly. It's got a lot of beginner content too in there. Like if you just don't know at all where to start, I'd say subscribe to the newsletter. We'll be putting more content out. Like I said, email us in if you have an issue, a question, and then obviously follow Ryan's trades on the Tasty Trade platform, because all good places to start and a good primer for how to think about the space, because I think there's a lot of misconceptions and a lot of things that
it's easy to get confused.
Yeah. So definitely subscribe, QR codes on there, and
Then next slide, Dan, we've got so many places to watch us, and it's never an easy route, right? Like this show, Tasty Crypto, is on the Tasty Live network, and also streaming on our Tasty Crypto X channel. So we're all over the place. But you can find Ryan every Monday on the OTC Live show for Crypto Hour. Then the Tasty Crypto Show, which you're watching right now, thank you very much, is on Mondays and Wednesdays at 4:30. But then Dan and I keep it weird, and we do Beans every Friday. We've got an awesome guest coming on this Friday, the 13th. Don't miss it. He is a remarkable body painter. Look alive, friends. We got a body painter coming on Beans. But he's a builder in the space in Web3. His experience and just journey has been quite fascinating, and you're not going to want to miss it.
Yeah, and do you want to go into the Bean Show a little bit of like what we're trying to do there?
Yeah, we're trying to, one, keep it conversational, very engaging. If you have questions, this is a great time to ask. We're sitting there live. And look at trade ideas beyond just charts. It's like what's actually happening in the space to make the narrative flow.
Yeah.
Get a bigger picture of what's going on in crypto and not such a narrow view.
Yeah, and it's more of it's like crypto know-how, but on chain. Like, how do you actually interact with crypto applications? It is trading, it is NFTs, it is Web3. We're not just doing like charting or options trading, but it's like crypto. It's Web3 know-how.
Yeah.
So you can see us do things live. You can see what sites we're going to research some of this stuff, where we're looking, how we use the wallet. We use the Tasty Crypto wallet as
DeFi.
to do DeFi and just things on chain, right? It's supposed to be like a streamer. You're tuning into us as like we're streaming and doing things live on our browser. So if you're curious about going deeper into what is actually happening, what applications are out there, what we're doing in DeFi on chain, how we trade NFTs, what people are talking about.
It's like taking a tour of the company you might want to invest in.
Yeah.
Like, let's go look. Kick the tires a little bit.
Right.
You know, I like this platform. Well, let's go see what's happening. Let's
Yeah.
talk to the people that are using it or building on it. So it's a more immersive experience.
Yeah, like why do meme coins have value?
Right.
You know, you can get in and see the market, like why they pump, what platforms people are trading meme coins on, and some of that stuff. So, yeah, I think that's just a deeper look into what happens on chain using a crypto wallet. So,
yep.
Yeah, a lot of education content coming, and like I said, happy to chat anytime. If you're interested in this space and want to know how to approach it, we can help you.
Absolutely. And Lone Sophos volunteers for the painting. I'll let Rustan know. And we hope to see you Friday. Grumpy Mike checked out Drip's website and his custom car lights. Dr. Drip was our guest on last Friday's show. He's a fantastic creator in the space as well. J2D Rustan, I've seen some of his videos on YouTube. Yes, you have. Rustan's got quite the following. If you go follow at Rustan on YouTube, you'll get a sneak peek. And it's beautiful. His work is gorgeous.
Real quick, we got a couple minutes left. You want to talk to this a little bit?
Of course.
Yeah.
I'm the one keeping it weird in Web3. I will take full credit. No, I won't. Dan's weird too. There's so many cool things you can do in this space that are just so outside of the box. What we're doing on Zora is we're dropping content and tokenizing it. And so naturally, we started with the squishy heads of Tom and Tony. We dropped them as FUD Daddy and Pump Me Daddy. So if you want some of those tokens, let us know and we'll hook you up.
Yeah.
But yeah, we're dropping content regularly. If you want to hop over, it's zora.co at Tasty Crypto. You can follow it, what's going on over there. It's madness and it's fun.
Yeah. And if you want a Tom or Tony token, we'll hook you up. So just we need your ETH address though. So you need a Tasty Crypto wallet. So definitely download that if you don't have it. Yeah. This is how you can follow us. I'm at truth_Dan_C. Shelly's at TeenyBod, and then follow us at Tasty Crypto, or connect with us in Discord, that's where you can get us most of the time. If you want to chat at us, we have a Discord that we run, which is our little crypto community. We help each other out there, share trade ideas, and that's exactly kind of the way that we like to do it.
Mm-hmm.
But we're out of time.
Thank you so much, guys.
Yeah, hope to see you Friday. If not, we'll be back Monday. Ryan will be back, and we'll see you then.
And if anybody's in DC,
oh yeah,
go to see the guys. The gang, the OTC Live gang, is doing a presentation. So check out tastylive.com for more info on that. But thank you all for being here. Much love. We'll see you Friday. I'm Shelly.
I'm Dan. Peace.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
To rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Oh yeah. Excuse me, right off the bat. When it's Wednesday, June 11th, a little bit after 5 p.m. Central Time, the best time. You know what that means? It's time for Tasty Live's Evening Show, a little podcast, a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. And good God, there's too many. There's too many. I'm not going to be able to cover them all today. I'm not even going to try. But I tell you what I will do. I'll shout out everybody watching on tastylive.com as well as all of you watching on Tasty Trade desktop and mobile applications. But if you want to be part of Bing, this little chat box on your screen, did we get it? Yeah, there we go. Don't leave me hanging. If you want to be part of that chat box on your screen, there's only one place you can do it. That's on the evil Google YouTube. More on that in just a bit. But head on over to Tasty Live's YouTube channel, subscribe, and that will give you access to just literally just live stream all your thoughts into this bad boy, appropriate and otherwise. You tell us what you had for lunch. Frankly, as long as your metacarpals and your phalanges are moving, or you can bash your skull into that keyboard, as long as you've got random ass characters
going into this chat, you're going to spoof the Google algorithm and putting us in front of as many people as possible. Off, and away we go. Shout out to all of you in the chat already. I'm talking about you, Lone Sophos, Donna, Catan, Soul Train, Brian Watson. No Chris, says Brian Watson. Not today. He's got some personal business to attend to. But come on, that guy's in the 9 hours that Tasty Live is on air. He's on like 6 hours of that programming. Sorry, he deserves a little time to get some things done. Shout out Emmett Morrison, all of you. Dav, I see you as well. John, what's up? Great to see all of you. Off, and away we go, my babies. Let's talk markets. Let's talk incentive. And let's see. Let the chips fall where they may. S&P 500 down a little bit more than about 0.25%. The NASDAQ down a little bit more than 1/3% on the day. The Dow Jones was scratched, and the Russell down around 0.2%. Surprise, surprise, everybody. Just the CPI just, I don't know what, people just keep building these things up like they're the biggest deals in the world. They don't matter anymore. None of these things matter anymore. On a relative basis, nobody cares. All of this data from 2 months ago or a month ago, the entire world has changed since then. Nobody cares. But in the interest of due diligence here, we shall cover it. The CPI this morning came out cooler than expected. What do you know? It really doesn't matter, right? That's the funny thing. You get a cool CPI, and on that same day, crude oil spikes to 69. God, I love this absolute sick game. It is a sick game, and it's only for crazy people like you and I. All right, let's talk CPI for just a second. Month over month, the consensus, everybody. And as I like to say, consensus is the least profitable opinion, but the consensus was 0.2%. We were going to have hot inflation, right? Isn't that what they told you? It's going to be warm. 0.2% month over month, not so fast. 0.1% month over month, year over year, right? Tariffs, year over year, 2.5% guaranteed, 2.4%. But core for sure, month over month, that's 0.3%. It's going to be hot, 0.1%. I'm just tickled by this. Can you tell? Can you tell that I'm tickled at the idea that everything everyone thought is always wrong? Always wrong. 2.9% was the consensus. Year over year, core up 2.8%. I'll stop. I think you get it by now. But I'm just having a little fun, right? Because isn't that what you're supposed to be? Aren't you supposed to be freaked out? Tariffs are just going to send inflation through the roof, everybody. Haven't you heard? You're an idiot if you don't say that, if you don't already know that, right? Funny how that works, isn't it? Anyways, this honestly, I don't know why I'm covering this because it doesn't even matter. Literally, today you get another China deal. How many times? How many times is that headline going to cross your screen? Another. We've made a deal with China. Oh, okay. I thought we did last week and the week before. Yeah. But this time it's a real deal. It's going to be great too. Okay. All right. What's in it? Well, we'll talk about. We'll be releasing all of the information shortly. Okay, but that's what you said last week. It kind of feels like we don't have a deal. This one, I'm sorry, I'm a bit tickled today. I'm in one of those moods. This one's coming straight from CNBC. I would put it up on the screen, but I don't want to. Bessent floats extending the tariff pause for countries in good faith. I think Lutnick is on CNBC as we speak. Selling his snake oil. But as President Donald Trump's 90-day tariff pause nears its end, I saw this earlier today, Treasury Secretary Scott Bessent signaling fresh openness towards shifting the deadline. How many of you saw that coming? How many of you were under some illusion that you could make massive trade deals with some of the largest economies in 90 days? Oh, it's so. We live in a clown world, everybody. We live in a total clown world, and it's like nobody realizes it. We just kind of like, well, I hope we make some really great deal. I hope we really come out on the right side of entirely reshaping global trade inside of 90 days. I don't think that's going to happen. And it didn't happen. Treasury Secretary Scott Bessent signaled the Trump administration's openness Wednesday to extend President Donald Trump's current 90-day tariff pause, which, by the way, the courts did uphold. I don't know if that was today's news or yesterday's news. I get mixed up because I'm 13 hours ahead. But at least for now, the courts did uphold these tariffs, which means they are, for now, credible, which means likely a lot of those trading partners who may have been dragging their feet here because, look, if the courts say the administration can't slap these tariffs on you, though they could just through a different section of the law, but you could maybe drag your feet a little bit. You didn't necessarily have to talk about doing a deal in good faith. But the point is, we're going to kick the can another 90 days for all the good boys and girls who did not retaliate, according to Scott Bessent. Risk a little bit lower on the day. I find that interesting. We couldn't really find a reason to get bulled up here. Couldn't find a reason. After that print, we spiked to 6,074 and just made a series of lower highs throughout the rest of the day. Not great price action. Not terrific price action. I don't know if there's a ton of volume, though, today. Didn't really seem like it. But I haven't seen any official volume numbers just yet. But not great price action, but not horrible either. I would say down 1/3%. I mean, it didn't say, I don't think the bears are necessarily cheering here. Right around 22,000 in the NASDAQ. VIX at 17 and change, so at least volatility peaked its head up just a bit today. We're at 16, mid-16s yesterday, 1695. I think we got into the 1650 handle or range. Back up to 1726, which I feel is a little bit more appropriate. I would really love, I think yesterday I bought some deep out of the money NASDAQ put premium. I know, I'm one of those guys. You know what I mean? When you guys were out there selling your 1 or 2 standard deviation vol, you're selling it to guys like me. Okay? And I'm happy to pay you the money. Every once in a while, you can take the money. Okay? I know vol's overstated. I'll give you the money because it's 16 vol and market's trading near 6,100 at this point. It's earlier today. In my personal opinion, I don't want to run scared for the exits just yet. I'm not ready to hedge net short, but I would like to give myself a little bit of downside while the getting is cheap. And I don't know if 16 vol is cheap. I could totally see us just grinding sideways to up throughout the rest of the summer. And, vol gets to a level that none of you thought was possible in the midst of re-engineering global trade and basic civil war and, geopolitical tensions. All that, and watch vol go down to 14. Watch. But I do think a little uptick is fairly healthy. I didn't get as much as I wanted. But if they take it down, if they take vol down again, you're going to be buying, or you're going to be selling some out of the money premium to me again. I'll take it. I'll gladly give you that drag for a little to be able to sleep well at night. Fixed term structure, not much here, man. It looks the exact same for like the last week. We move slightly up, we move slightly down, but vol has been wrapped. That front month future has been wrapped right around 1850 for like the last 3 weeks. And the shape of the curve has not changed. There's a little kink in December. Not much changing. I could take that same graph and just post it up and never change it. I could just take a screenshot and I don't think you guys would ever know the difference. Bonds on a cooler than expected, I guess cooler than some expected. CPI report rallied a little bit here today. such a boring trade. There's nothing here, man. 113 and 7 ticks. I guess it's not the worst thing. We move up towards 114, which seems to be some sort of like new point of control, where 117 was this point of control for a long period of time, 5 points up, 5 points down. It now seems like 114 is sort of this new point of control with maybe 4 points on either side. Who knows? 3 points maybe. Sorry, I'm parched. And the 2-year, a little bit of a rally here. I had this whole big argument with Ilya yesterday about the 2-year and talking about how, they've basically gotten down to between 1 and 2 cuts for this year, and then they've got 2 priced in for next year. I do think it's possible they hold off doing anything for the rest of this year. But if that happens, I think I don't think the cuts disappear at this point. Like, some cuts have disappeared from April until now. They had a ton more cuts priced into the next 2 years than they do right now. But even if Jerome Powell is able to hold off, or at least convince the market he's going to hold off for the rest of the year, I still think the market's probably going to move those into next year. And I kind of like the risk reward of getting long the 2 years here. At least that's what I said yesterday, but I missed a pretty big move today because I don't have the position on. I don't know. Maybe there's still time. There's still time, Victor. You can still do it. I don't trade a ton of the 2 years, and when I do, I trade them outright. But this one, I don't know if I really want to. I think I would rather trade the 2-year options, but I don't think I've done that before. Anyone in the chat, give me some thoughts out there about liquidity and the 2-year options. Anyone else that's played with them? I haven't done much with them. I've done a lot with. I've traded them outright. I've done a lot with the 10-year and the 30-year options, but not a ton of the 2s. Let's see here. Let's keep cruising. What are you guys saying? Actually, I haven't even checked in with the chat. My sincere apologies. Emmett says Victor is spicy today. You're damn right. Oracle up $11. Of course they are. Donna, come on, man. Of course they are. We're headed into the AI revolution, and Oracle owns the data for they own all your data. Of course they are. Well, how old is Ellison? Isn't he like 80-something years old? That guy looks, if you told me he was like 60, I'd say, yeah, all right. You told me he was the late 50s. I'd say, yeah, okay, I believe you. I don't know what kind of like, what is it, adrenochrome? I don't know what kind of children's blood that he's feasting on, but that dude like doesn't age. China deal. Ilya for Fed president. Bro, that'd be his dream. Can you imagine? That would make. I should ask him. I think I have asked him before. He'll say something like, "No, I don't want that job," or whatever, very humbly. But bro, if you offered that, that's like a kid in a candy store. Maybe Oracle closes below 185. That would be nice if we got these AI stocks to blow their brains out. I don't know if it's going to happen. I don't know. I saw, what's his name? You see the guy from Wells Fargo call another 16% upside on continued AI strength? I think his name's Chris Murphy or something like that. Seems like, I've never met him. Seems like a nice guy. I just don't know. I don't know how people do it. There's no way I could get on national television right now after the markets have rallied. What are we, 30% off the lows? And get on national television right now and call for a 16% rally. Bro, but if you called me in the middle of that chaos and we're at 4,800, I'll say something crazy like that. I'll call for a 15% rally because the odds are ever in my favor. But at 6,100, with all of these AI stocks at or near all-time highs, you call for a 16% rally. Wild. I'm not saying it's not going to happen. I'm just saying that takes a pair. I'd rather call for a 5% correction in AI stocks than a 16% rally in the market. But I don't know. Maybe he's got a bunch of really smart number crunchers. I gave him a really sexy report, and he said, I need to get on television ASAP. The world needs to hear this. You guys have cracked the code. I'm sorry. I don't know what's up with me today. All right. Get used to that. Jeremy Wallace says, get used to that headline. Breaking news. President has authority to exercise presidential powers. I know, man. Wild, bro. Absolutely wild. And the same people. God, man. Everyone's going to be pissed at me. But the same people who wanted to believe that the president didn't have the authority to implement tariffs, which he does, under four different statutes of the law, had no issues with a president trying to what's the word I'm looking for? Trying to basically cancel debt, which he doesn't have the authority to do. That 100% you don't have the authority to do. We're funny, man. We're funny. I don't get it. Rising global uncertainty as the central banks lower reserve requirements. Victor, I'm curious if you read The Creature from Jekyll Island by Edward Griffin. Of course I have, Taif. Of course I have. VIX at 16 is boring. Yeah, I'm telling you, Emmett. I say this every time. When vol goes crazy, everybody loses their mind. But it's the best. And when you do this long enough, and you have to go through these long stretches of like 16 VIX, or God forbid, 12 VIX, and you just come in every day and you watch these stupid numbers barely move, you yearn for a 22 VIX. You dream of a 27 VIX, you know? You pray for the spike to 40. And you don't argue whether or not the spike to 60 was real, or whether or not it was just due to some bad prints and out of the money. You don't care. You're just happy like a pig to be in an environment where nobody knows anything and everybody's scared. Because when everybody's scared, they just dump everything and they ask questions tomorrow. And so you just sit there and you take it all from them. And then the next day when they come back, they say, well, I guess things weren't really as bad as I thought. Can I have those assets back at the same price? And you go, no, you may not. No, you may not. Palantir at an all-time high today at around 136. Unbelievable. I agree. This is one of those weird markets, man, where, you know, it's like the guys who will preach the buy high, sell higher, and the guys who are doing like the moving average crossovers, you know, that your short term, you know, your 7-day is above your 21. They do pretty well here, because all of us are fairly cynical, you know. All of us want to fade a market, and if a market doesn't give you two-way action, it's really hard to stay disciplined and not fade it if it's not giving you two-way action. In this market, many of these underlying instruments are not giving you two-way action, and it's really easy to just get beat up as markets like climb higher. You know, and you read all these headlines and you're like, oh, the world is crazy right now. People should sell their stocks. It's like, no, maybe the world is crazy right now. And that means the threat of nominal prices going higher that threat has never been more elevated. Because no matter what we get ourselves into, there's only one solution. And it seems like what we're trying to do is grow our way out of the problem, which means you've got to have really high growth rates. How do you get really high growth rates? You look the other way on mergers and acquisitions that probably create overly dominant market positions. You deregulate, even though you know some of that deregulation is going to cause negative consumer is going to have a negative consumer impact, perhaps even negative environmental impacts. You print money. You pass a bill that's going to add trillions of dollars to the deficit, and you increase the debt ceiling by $4 trillion just in case, so that there's no threat of somebody sort of getting in your way from now into the midterms and threatening not to give you what you want. You've already raised the debt limit. You can do whatever you need to do. It really seems like the strategy went from let's try to be fiscally conservative, let's try to find waste, fraud, and abuse in the government, let's try to change the debt trajectory, to we got to run this thing hot. That was a bad idea. That's not going to work. Abort, and let's run this thing hot. That seems to be where we've pivoted. And to fight that on the tape is going to be hard. So I'm not standing in front of this thing. Do I think it makes sense what's happening? No, man, I stopped thinking any of this stuff made sense a very, very long time ago. Do I think the valuations are attractive? Not in a lot of instruments. I would argue, though, that the market's S&P multiple is way more stretched based on basically 5 to 7 names. But if you look under that, there are a bunch of names that do not have that type of stretch multiple. So as a whole, it's expensive. I think individual stocks are not. What that means is, would I be really interested in betting another $5 in Palantir? No. Am I interested in the next $5 to the upside in Nvidia or Meta or anything or Broadcom? I'm really not. I don't love that risk and reward play, but shout out to all the momentum people that are going to stay in there. And if you're in there, as long as you're risk defined and you're ready for, an 8 to 12% reversal, because those things look like they might have fat left tails. As long as you're prepared for that, it's your money. It's just not what I'm doing here. I want to look for value, but not like boring value, high beta names that haven't had the same type of valuation slapped on them that the rest of the stuff does. And if you want that easy trade, the easy trade is just Russell versus probably, I want to say that NASDAQ, but I just don't know how much it's going to give you. So let's say Russell versus the S&P or Russell versus the NASDAQ. That's like the easy proxy for what's happening right now. But that thing, it'll give you a week, It'll give you a week where it makes you think that the Russell wants to outperform the rest of the market, and then they just start buying the Mag 7 again. It's without fail, that trade. What's the saying? What's that saying? Here for a good time, not a long time. That's the Russell versus anything else. That's the Russell pairs trade. It's here for a good time, not a long time. So ride it while you can. Sorry for coughing in the mic. My sincere apologies. I sort of forget. I'm in your earlobes. Obviously, the odds that some bombs are headed in Iran's way seem to be elevated. If you look on Polymarket, Polymarket, literally, they have a market for the odds. I would show you right now, but I don't have my VPN on. In Polymarket, and most betting sites are blocked here in Singapore. So enjoy your freedom over there. But there is a market on it. Let me see if I can find it on my phone. And I think the odds the last time I looked were something like 40%. And so you sort of have your reasons. I think we've also sort of sent some evacuation notices and things of that nature. Here it is. Israel military action against Iran before July. 48% chance. 48% chance. 50-50 coin flip. What a crazy world, bro. So the question is, how do you play this? I would love to fade oil, but I don't know that I can do it just yet. I would love those odds to get a little bit higher. And I think it's the question. Also the question becomes like, how long does oil become or stay elevated? And then what will that do to inflation expectations? So if inflation expectations don't really move much, then the market may expect this to fade just like every other crude oil move. I do think it's been helpful for the energy sector. The energy sector for like the last week, I told you this was the place I really liked, has been mostly outperforming on a daily basis all other 10 sectors of the 11. So if you look at all sectors today, XLE at the top, up 1.4%. It was one of the only ones actually that performed positive territory. Utilities, healthcare, and industrials were basically flat. And everything else was negative. Materials took it in the teeth today. But I think this is helping all my energy stocks, and I do want to fade crude oil. I don't want to fade it yet. But that's been the move, right? I don't think 68 is enough. What's the IB? I apologize. I know I'm hacking in your ear. IB rank at 55%. Who's got some short oil positions on already? I know somebody out there's crazy enough to say, I'm not waiting. I'm going in. Yeah, look, they've what can you sell? What can you sell? 78s, 80s. Oh, yeah. Yeah, I think I'm going to do something. I think we've got to do something here. Not you. I'm going to start small, sell some upside call spreads in crude oil. I would expect to be tested. So I'll only do a few at a time and build up a bigger position as I get tested. But yeah, I think I want to sell. All right, what are you guys saying about this all these shenanigans? Same thing as Trump 1.0, unrestrained spending, kind of. If I'm not mistaken, he was on pace for $500 billion deficits annually for the first 3 years, and then he exploded it in the last year. So yeah, as a whole, yes. I'm not going to argue that that's not true. The pace of the first 3 years was much different though than the last year. And that was a decrease from the previous administration. The previous administration before him, I believe, was at an annual pace of right around $1 trillion, between $800 billion and $1 trillion annually. What's What's going on, night moves? If CL gets up to 68, then it's in its happy space and will likely travel to 75, says night moves. Seems like a good enough reason to me. I don't doubt it, but my thing is, if we don't hit 75, you know, if we mess around, turn around on 70, and I miss the whole trade, I'll be pissed. So maybe I think between 70 and 72, I like the idea of fading this. Watch, this will be the first time I trade crude oil in like 2 years, and watch me get my face ripped off. Taif says, Victor, based on the data, we had an increase of revenues in tariffs and can see it on trade balance numbers. Yeah, I saw that. I think 22 billion was the number, but annualize it. If you annualize it, it's less than $300 billion annually. I get it. I looked at all these numbers, and my thing was they were supposed to find $1 trillion in revenue, which they're not going to come close to, and they were supposed to find $1 trillion in cuts, which they did not come close to. Collectively, they're going to find about $500 billion between revenue and cuts. That's nowhere close to the $2 trillion that they needed. But I hear you. I did see that too, Taif, but you got to annualize it. It doesn't even come close to what they needed. And they're still passing the same size package. They're just going to run this thing hot, bro. 3,386 in gold, up another 1% or so. Gold hanging tough here. You know, a lot of people calling for the demise of gold, and they might be right. I think the setup was there. We caught that little down move off of 3,500. I want no parts of this thing. You know, I don't love shorting a dull market after a consolidation phase. We've been in a consolidation phase since the beginning of April. If this thing wanted to dump, why hasn't it dumped? I don't know. I could see a lot more trade deals, and especially if there's something meaty and material on the other end of these China announcements. I could see how that would potentially lower the temperature, potentially increase the demand for U.S. Treasuries, thereby decreasing in some small way the demand for precious metals. But I just would rather bet silver, man. I would rather bet silver. We did roll off 37. I think I told you guys I took half the trade off. I took another half of the trade off yesterday. So I have 25% of the deltas that I started with. Yeah, that's what we're doing in silver. We'll still ride it, but we're not going to let them take our money from us because silver's crazy. Elon has a broken heart and he wants to make up. Yeah. I don't know what to make of that ridiculousness. That was a weird, the way that ended was nothing like the way I thought it was going to end. I did not have Elon deleting his tweets and apologizing, and Donald Trump just completely swim moving him, ignoring him altogether. I didn't have that on my bingo card. I don't know. If you're Elon, you're just praying. Just don't mess with my robo-taxi. Just give me the robo-taxi and I'll be fine. Everyone thinks it's about his Starlink contracts, and I don't think it is. I think they're going to take that stuff. I think they got him over a barrel. It's the robo-taxi he needs. Controlled opposition, says Lucid. Yeah, a lot of people, I've heard a couple people say that. You know, I've heard a lot of people say that. I think that's one of the bigger problem isn't that they made up or didn't make up, whatever. It's that the manner in which he's sort of apologizing in this sort of like tail between his legs manner He's basically whatever opposition there was, right? Whatever opposition there could have been in the Senate for reform on this bill, it's pretty much gone, you know? Because Mr. Moneybags over there has a credible threat of running somebody against you and having a meaningful impact on your ability to get reelected. And that is gone. You know, if this was an actual democracy, then all of you sort of not being okay with this bill, that would matter. But I think we all know that it doesn't matter. It doesn't matter. It doesn't matter if you call your senators or you write them a letter or you show up and you knock on their door and demand a little bit of FaceTime so you can explain to them that this isn't what you voted for. It doesn't matter. If you don't have the money to threaten their reelection prospects, they don't care, bro. And so in some small way, yeah, is it controlled opposition? Sure. But it's some small way, it's the only opposition. He represents the only opposition to the uniparty spending all the money, all of it. There is none, by the way, so all of it. He should have said he was hacked. That would be funny. What do you invest in at these levels? That's a good question. I was kind of looking around today because all the stuff that I loved, everyone else loves now. Like, look at this stuff. Look at Cameco. This stuff went parabolic. Everything in my account. I mean, I don't say it like that, but like SMR, all this stuff went absolutely insane to the upside. All these nuclear stocks, and they're not stopping. SMR was up 20% today, man. Imagine panic selling in April and watching everything you own just go parabolic to the upside. That's a tough pill to swallow. Elon sought counsel from Sam Altman. Have you noticed all these guys are doing deals with each other now? You know, they're all doing deals with each other. All these, you know, Google with who was it? I should have the examples offhand. My apologies, but I've been noticing there was probably 3 deals or so between these Mag 7 and large AI companies, large tech companies. And I'm going, nobody's going to stop that. Nobody's going to stop. You need growth running hot, and they got rid of Lean and Khan. Like, do you think anyone's going to step in between these guys doing all these deals? No way. Tom Banjo says, yep, I sold covered calls that are now deep in the money. Big blunder. It happens. Happens to every single one of us, my friend. You'll fight back. You'll fight back. Don't let them scare you, though. Don't let them scare you, and don't let them get FOMO. I think that's probably the hardest thing. Somebody asked me in the chat, what do you invest in at these levels? And I think that question, it sort of starts with like, I gotta buy something. What do I buy? And I think I'd sort of just be careful about that general premise. Ask first if. Me personally, I think a lot of this stuff could continue higher, but it doesn't mean that I would invest in these things at these levels. I think energy, even though it's had a nice like 2-week rally, I think there's a lot of stuff in energy that still offers a relative value. But you can't trade it for the next 2 weeks, in my personal opinion. You ask me, what do you invest in? I think there's a lot of stuff in energy that is just now, people are just now starting to pick up. But I also can tell you, if crude oil gets to 70 and then they smash it back down to 60, that's probably not going to be good short-term price action for energy stocks. So I'm saying that because, like, if I say today, yeah, I think many of the energy stocks, there's a few mid-cap, small and mid-cap, mostly mid-cap energy stocks that have pretty decent betas, would offer a lot of leverage on a dollar invested, that kind of been left out there. If I say that, and then 2 weeks from now, crude oil dumps to 60, and you're like, oh man, I shouldn't have bought it here. It's like, well, I'm talking a very long time frame, and I'm not going to pick the bottom here, but I still think on a relative basis, energy is cheap. And the way that I think about this isn't just price. So if you were to go to like the S&P, the spiders page, just type in like, I'll do it with you here. Let's do it together. I'll tell you why I think this. It's not just because of price. These cookie things. You know, every time I see one of those, you know, you guys just click through them, don't you? Every time I see one of those, I'm going, they must be doing something so bad, you know, to pass a law and to be, we've lived through this for like a couple of years now. Every single site you go to, you have to explicitly agree or decline. They must be doing something so bad to make the internet so unusable. That's the only thing that goes through my mind. Like, what? They must be doing something so bad with that data to get you to explicitly agree at every single website for years, knowing how bad the user experience for the internet has become. Nobody even asks either. I can't even not. You can't even not do this. See? Aren't I supposed to be able to say no? I hate these people. You don't hate these people enough, and but I hate them enough for all of you. Okay. So what I do, I just look at the sector weightings. Okay, this is the entirety of the S&P 500, and tech makes up 30% of the weighting of the S&P 500. So not only is tech at highs, many of the tech stocks, but they also represent the biggest concentration within the S&P 500 itself. So if you were concerned about value, you're concerned about concentration risk of the market, you're concerned about a fat left tail, generally speaking, that risk can it tends to manifest itself in the tech sector, right, which has the higher beta. But if you go down, only 3% of invested capital, 3% goes into energy stocks, 3%. So that passive bid in the marketplace where you're just putting money in your 401k and that just gets dumped in more Tesla and more Apple and more Nvidia and more Microsoft and more Meta. It just keeps getting dumped in the same stocks. And only 3%, 3 cents of every dollar is going towards energy in that passive bid and in the whole S&P 500. Only 2.5% goes towards utilities. So things like water, some nuclear gets categorized in this area, not always. A lot of energy, some energy companies are categorized as utilities instead of energy. And then materials are 2%. So the way that I think about why do I like those areas of the marketplace? One, they're deeply uninvested. They've been uninvested for decades. There's very little investment capital that has been going into these underlying. You could say, well, Victor, that's because that's not where the opportunity is. And we have a digital economy, and that's where the best bets are. And I would say, okay, sure. But I would also say that right now, what did China do to put pressure on us after we put tariffs on them? They threatened to limit our supply of rare earth. So at the, but people forget, you can't just make one of these things with nothing. You need materials. You don't power this thing with nothing. You need energy. You don't power a data center, all the data centers that they need to build, with nothing. So if you're going to build more data centers, you're going to use more AI, and all of those things have more energy consumption, and you want more technology that needs more materials. And those materials, meanwhile, we're running higher and higher deficits. We're devaluing the dollar, which means real assets, their value, their price goes up. And so one of the reasons that I really like this area, or these items, through this period of time of financial repression, it's just because if you don't have actual real assets, it's probably the closest thing you can do, which is invest in real scarcity. That it doesn't seem like we're at that point in time yet. We're just now getting to the idea that, oh shit, how are we going to power this stuff? All of a sudden, they completely deregulate nuclear energy here and abroad. They're gonna wait. And people, it's just weird, like you just have to sit on these pitches, and then everyone goes, "Oh man, I got all these, and I made all this money in Nvidia, but like we can't power this stuff." Or we made all these investments in humanoid robots, but we have no materials to build these things. We told people there were going to be 1 billion of these on the planet by 2027. Where's it going to come from? So, I don't know. It's not sexy by any stretch of the imagination, but the areas what I think are most interesting, and that's why I keep talking about them, is materials, energy, and utilities. And I'm sort of giving you a very simplified case as to why I think that is. I think people, and then the other thing is obvious. I think this one is a little bit too late, though. I don't know how early we are in this trade, and I think somebody just mentioned it, but it's on shifting capital flows. So, a lot of people have said, I'm moving my money out of the U.S. I'm gonna invest outside the U.S. because I hate Trump. I'm sorry. I just imagine that's how they said it. Directionally, I think that's actually right a little bit. So I think, and I've said this on the show before, but if you haven't caught it, what I try to do for my own self is I'm not the smartest guy. So everything that gets complicated, I try to break it down in a real simple narrative. And it's not always correct because I'm overly simplified, but at least it's a model of how to interpret the complexity around me. And that model allows me to sort of, I use as a tool to navigate this complexity. So the way that I saw the world, the capital flows prior to Trump threatening the tariffs on the world was as follows. We export dollars to the world, okay? What used to happen is we would export goods to the world and they would export their goods, right? So comparative advantage. What do we create? What do we specialize in? What do we have access to? And what do you specialize in? What do you have access to? And we're going to trade what we do, our comparative advantage products, with your comparative advantage products. That was the world maybe prior to I don't know, when I was a kid, maybe even before. But at some point, let's say after China joins the WTO, sometime after, it becomes, we're going to send dollars to the world, no more goods, really. We're going to send them dollars. They're going to send us products. And now, because they've sent us products, we've sent them dollars, they're going to have, in many cases, excess dollars, a surplus of excess dollars. So what do we want them to do with those dollars? We don't necessarily want them to sell those dollars. What we want them to do, and what we created a system for, is they would then take their excess dollars and then invest those dollars in U.S. financial assets. So they would buy the S&P 500, buy the NASDAQ, buy Tesla, buy U.S. treasuries, right? So that excess dollar surplus comes back into the U.S. and it gives us lower relative debt. It gives us higher relative stock prices. And so we, in some ways, whatever we lost in terms of manufacturing, we gained in terms of high asset prices and low borrowing costs. The attempt here is to re-engineer trade and send more goods for goods. And in doing so, we'll have in theory, lower debt trajectory. But if we do that, the world is going to have less excess dollar surplus. That means those capital flows coming back into the U.S., there's going to be, theoretically anyway, there's going to be less of those. There's less of a bid, an automatic bid in U.S. financial assets. And so I think in some ways you've already seen that trade play itself out. I don't know how that, but that could be a very long unwinding trade, right? There's been a U.S. exceptionalism, a TINA, there is no alternative trade bid in the market for a very long time. I don't think that it's over. I just don't think the U.S. trades, and this is just me, this is a total guess. This is some guy on the internet talking right now, okay? So if there's some young person out there, don't take what I say as gospel. But I don't think the U.S. trades with the same premium, but I think it does trade at a premium. So the relative value of, let's say, long Europe, short the U.S., that's been a losing trade because the U.S. has been outperforming Europe. But what's happening right now is the spread between those two markets are coming back in. I still think the U.S. trades at a premium. It just shouldn't, in theory, it shouldn't command the same premium because the capital flows are changing. And that's not just Europe. You could take that all around the world. So I do think for a very long time, there are things that U.S. investors, U.S. traders, we never had to talk about. If you traded options for the last 20 years, even if you were trading in size, you never had to teach people about Rho because interest rates were on the floor and you were never, ever going to see a massive shift in interest rates to the extent that it would really materially change your risk position. I mean, I can't tell you the amount of times I talked to people during the COVID boom when all new people were coming into the markets. There was times when Ryan Grace and I, we would run a stream and we wanted to tell people, hey, inflation expectations are bubbling up. Let's talk about interest rates here. And they would say, well, you guys knock it off. Stop talking about interest rates. We want to talk about Tesla. We want to talk about ARK. We want to talk about like all the solar stocks were going gangbusters at the time. We want to talk about K-Web. So they all wanted us to just talk about high beta names. None of them wanted to hear or learn about interest rates. And guess what destroyed everybody in 2021, 2022? The thing that you thought you didn't need to know. I think in some ways, the U.S. investor and trader has been somewhat spoiled for the last 20 years in that we don't really need to know other markets. We don't really need to know what's going on over there, or is there relative value in Europe, or I'm going to say this, even though Spain is in Europe, but like Spain or Mexico or Canada, parts of Africa, ASEAN, like there's sort of this, I don't need to know it. Therefore, I don't sit down and I don't look at that stuff. So I do think over the next 5 to 10 years, that's probably no longer the case. And there's more discussion, there's more potential opportunity, and having conversations that are outside of 7 stocks inside the U.S. and just wondering, oh, I wonder how many Netflix subscriptions they had last quarter. Like, I don't think it's that easy anymore. I don't think it's that easy. Let me read a couple of yours. Energy used to have a 12% weighting. That's right, Tom. It did. How has international diversification worked out over the past 15 years, says Tom. I agree with you, but again, I think I'm sort of I agree with you, but I think sometimes there are seismic shifts, and if you believe in cycles and markets, they can be long cycles. You know, the debt cycle is 75 years. A social cycle, according to Neil Howe, is 80 years, right? 4 20-year generations. I would be really careful about saying whatever happened in the last 15 years is going to continue to happen. I sort of see what's happening right now is the functional equivalent of maybe not leaving the gold standard in 71. Maybe it's not exactly that, but maybe it's something akin to like the Plaza Accords in the 90s or something like this. It is a real pivotal moment. It's a big change. It's a seismic shift. And I think not seeing it that way, seeing it as just a crazy person, a madman pressing some buttons, doing the wrong things, I think you can miss this real big picture happening. I might be wrong. I could be wrong, but that's my view of the world, that we are going through a really seismic shift in restructuring of debt, restructuring of trade, restructuring of territories, restructuring of global powers. We're undoing the unipolar world that has existed over the last several decades, and we're moving into a multipolar world, which we had prior to the unipolar world. The world is no stranger to multipolar worlds, and I just think I see what's happening now as a really big seismic shift. What the hell? What's this person hawking in the chat? Is this real or a bot? The Degenerate Trader. I love that name, my friend. I really do. All right, let's see if we got any more. We did Besant already. I'll read this one. Trump's done deal with China. Trade damage will remain, logistics firms and retailers say. Hey, by the way, any empty shelves out there yet? Sorry, just had to rub that in. Dude, people were so mad at me. They were so mad at me during that period of time. Just not, if you just didn't freak out and you just go, okay, let's think this through. I know I'm supposed to say it's chaotic and there's no strategy and there's people pushing buttons. And I know I'm supposed to be saying that if we don't stop this, the grocery stores are going to be empty in 4 weeks. I know I'm supposed to say all that. But let's think through this. They were so mad. President Donald Trump said the trade deal with China is done, though details and confirmation from China were lacking. Bro, this dude has announced the done deal. and then they meet in Geneva for 2 days. He announced the deal was done. Then they meet to iron something out. Wild. But supply chain executives said the damage has been done and won't easily be reversed, with job losses and higher consumer prices still likely. The CEO of a retail group said the 55% China tariff is too high and not a win for America. That is going to be tough, man. But I do think Yeah, I want to be careful because I don't want to get too down into the weeds of tariffs and logistics because that's not my thing. But I do think people tend to think about tariffs as the percentage of the final good. Like if you buy something for $50, the tariff is not on that price, you know. If it, you know, a lot of times people are buying this stuff for $5, $10, and they're marking it up tenfold and selling it to you, and you still think it's a good deal. And I'm not saying that that's not going to hurt people. It's not going to cut into the profit margin. It's not going to put some people out of business. That's not what I'm saying. But I am just saying it's worth remembering that the tariff is not applied to your final price. It's applied to the importer price. And the other funny thing here is, we sort of want our cake and we want to eat it too. So here's what people are saying. They're saying, like the cure for, I don't know. I don't want to go down that route because it'll look like I'm trying to justify this stuff, and I'm not. I'm not trying to justify it one way or another. I'm here to trade whatever I feel is highly likely that people have not discounted. A reported 55% tariff on our largest supplier of American apparel and footwear, stacked on top of already high MFN and Section 301 rates, is not a win for America, says Steve Lamar, CEO of American Apparel and Footwear Association. Wild. I was just at Woodman's. Shelves are packed. Of course they are. It is a bot, isn't it? If we can, I think we got a bot in here, guys. Production, if you could kill him. I mean, not kill him, but like kill the comments. Yeah. All right. These things are getting just destroyed. Gosh. I missed this whole rally. I missed this entire rally. Makes me really upset. Who caught the airliner rally? United, Delta. Some aren't as nice as the others. I keep coming back to this, and I will come back to this every single day. Ooh. Why? Bonds were up a point today. Why would home builders get murdered? Is there data? Mortgage applications. Mortgage applications were up 12.5% week over week. What? And 15% increase in refis. Why? What the hell are people doing? Why would home builders be down? Anyone explain that to me? Maybe I must have missed an earnings announcement. Sorry for doing this in real time, but now I got to figure it out. I'm curious. All of these things were down 2% today, and the long end yields went down, and mortgage applications were up 12%. Oh, Lennar had it. No. Lennar has earnings next Monday. What the hell? Can anyone explain this to me? I'm seriously scratching my head. I'm literally scratching my head. I do not understand. Because that's a big move. Nearly 2% is a really big move. And it was all the home builders? What the hell? 2.5%? What happened? AI doesn't need housing. VJ is bi-curious. Catan, you thinking what I'm thinking. Some part of me wants to bet some dumb upside in Lennar for next week. Monday earnings? Why? Short sellers 72%. In what? Lennar, Brian? Or in XHB? We're going to run them. This makes no sense. And if nobody can explain this to me, I'm going to buy it just because. Talk me off of the ledge, people. I'm sorry. I know this isn't thrilling internet television, but I've got to figure this out. British home builders. I don't care. Did copper move up? What the hell? Broward home builder filed for bankruptcy. That doesn't matter. I can't. All right. I'm going to have to stop. You said the increase was in refis. That's not new home. No, it was mortgage application and refis. Look, I'll show you. So the composite was up 12.5. New mortgage applications for purchase was up 10%. And new mortgage applications for refinancing was 15.6%. So it was both. Tom gets it. He says, I'll do it. Let's bid up Lennar. That's exactly what I'm talking about. It's not copper either, Catan. It's not copper. That's what I thought. Maybe. It's not. Copper was down. It doesn't make sense. You guys are hilarious too, because you don't even care. You just want to know what we're pumping. That's why I love all of you. I think if the options markets were open right now, I'd do it right now. Just because I some days, I don't live in my home country anymore. I can't see my friends or family on a regular basis. I work nights basically, so I'm just I'm like a swamp creature. My life is like a swamp creature. And so I need to feel something sometimes. And so I love looking at these numbers, thinking I see something in them, which I don't. And then just lighting my money on fire just to feel something. That's why gamblers do what they do. It's not because they think they're going to win. It's that feeling when they lose, that split second, that feeling. They're chasing that feeling. What's wrong with me? I'm doing it. I don't care. All right, I'm doing it. I don't know what it's going to be. Maybe some 125, something like that, upside in Lennar for next week. They have earnings, if I'm not mistaken, they have earnings on June 16th. It is after the market close. None of this price action makes sense at all, and I'm probably running into something. So don't do what I'm doing. Don't do this at home, kids. But this thing has been basing ever since April. I'm going to hit smackdown. I know it, but I can't help it. This doesn't make sense. And when things don't make sense, it's like rich people's footprints, you know? That's what this game is. It's like just forensics, trying to figure out what rich people are doing and why. I'm taking an upside bet. I'm done waiting. June 16th is their earnings date, and I'm going to finally play home builders to the upside, not because it's going to be good news, but because it's going to be horrible news. And if it's bad news, the greedy people love to think it can't get any worse than this. And while it probably can, I don't know. I don't know what this move is. I should probably do more due diligence, so I will. And I'll tweet about it. So if you want to follow this little home builder saga, you can follow me on Twitter at Victor Jones. The Owen Jones is 0 because I like to be difficult. I apologize. I wanted to find some sort of resolution here. I don't want to leave you hanging, but I don't think I'm going to be able to resolve this little story. Sometimes prices just go down, but they don't usually do. It doesn't usually happen like this. The whole industry moved 2%. That usually does not happen. There's usually a reason. I must have missed something. I just don't know what it is. And if a room full of smart people can't figure it out either, then you just fade it. You just do the opposite. All right, everybody, that's going to do it for me. I'm not sure. Chris might be back tomorrow. He wanted to come in tomorrow. I might ask him to come on, but honestly, he filled in for me on Sunday, so he had an extra hour of work. So we might give him tomorrow off and just say, in exchange for him covering for me on Sunday. And then we'll have another conversation with him next week. I think I'm going to offer it, but he's a hardworking dude. I don't know if he'll take it. Home insurance. No, it wouldn't be that. If anything, all these protests that are about to go down on June 14th could potentially mean we're going to need more homes built. Knock on wood. Hopefully that's not the case. Delinquent mortgages up. Is that what it was? We'll figure it out. I'll tweet about it. At Victor Jones, the Owen Jones is 0 because I like to be difficult. Thanks for hanging out with me for this last hour and a half. I look forward to hanging out with you guys again tomorrow, Thursday, which is Synthetic Friday for this show. And I will tweet. I'm going to figure something out for home builders. I can't talk about it for 10 minutes, 15 minutes on air and leave you with nothing, but I will do it on Twitter. I'll see you back here tomorrow, same time, same place, same great network, only on Tasty Live. Until next time, peace.